This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I don't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr on assignment on the Minnow down south. There's 3 swimming pools.
Oh, yeah.
You know, it's a different Minnow. He's got the whole thing going. Lisa Mateo here as well, fired up. She's got newspapers. I looked at the list. They sent me a prep list.
Oh, they do?
So I'm warned.
Okay.
It's really quite good. It is an extraordinary news flow. We're going to try to give you the best we can today. We have a guest list that is just outstanding for conversation to keep you abreast of all that is going on. Stephanie Baker will be with us in 10 minutes with her acclaimed book on Mr. Putin. Lots to talk about there. Tyler Kendall on assignment in Florida with the president. I believe he's giving a speech tonight. In the markets, a modest elevation of tension. I got the 10-year real yield, my thermostat, from a 205 out to 2.110%. Paul, what do you see on the launch pad that gets your attention?
Yeah, a little bit of red on the screen here, Tom, for the futures. Not much going on there. But
VIX hasn't moved.
No, the VIX has not moved. The 10-year Treasury. I mean, you can sit there in a 10-year Treasury and get paid 4.57% here. That's not too bad.
I noticed a 30-year bond, 4.80%. Getting out there, you wonder if mortgages tick up again.
I know. And, Tom, we're on the gold watch, 3,000 gold watch there, $2,951 right now for gold, a little bit higher again today.
Lots of news on China and gold. We'll talk to Freya Beamish about that here in a moment. On your commute across to frigid America, we say good morning. Be careful out there. It's really sport, particularly here in the east and out into the Ohio Valley. Good morning, 99.1 FM Washington, Bloomberg 1130 in New York, our flagship. And it's 4 below at Bretton Woods. Are you kidding me?
No, thank you.
I mean, the insulation at the Mount Washington Hotel isn't that?
I need to go there.
It's really beautiful.
Yeah, I want to check that out.
I was there one night, the roof blew off.
Exactly.
Actually, but it's actually.
John Tucker just told me the highest recorded wind was at Mount Washington.
It is. It was 160 a couple days ago, and it was like 60 below wind chill. And,
no, thank you.
You know, it's your Hardy. You're in New England. You're Hardy.
That's right. They're Hardy.
McAvoy's hurt for the Bruins.
I heard,
and it's like, you know, a big deal. How about the Interactive Broker Studios? How about the Bloomberg Business Flash? How about Lisa Mateo?
Let's do it. We have little movement in futures this morning. This is after more tariff talk, possible levies around 25% on cars, chips, pharmaceutical imports. Because of that, I want to start with global auto stocks. They're edging a little bit lower. Volkswagen, Renault, Mercedes-Benz, all down about 1%. Then we have S&P futures. Right now, want to start there because yesterday they hit a record. Right now, S&P futures, little change, down about 4 points. Dow futures down 0.1%, 69 points. NASDAQ futures little changed, up about a point. European stocks rally pause. Asian equities retreated. Investors kind of turning cautious. So taking a closer look, we have the Stock 600 index right now down about 0.5%. This is after a gain of around 10% so far this year. I want to start with Glencore. They were off 7% in London after profit fell. Then you go to HSBC. They said they're going to incur about $1.8 billion in charges over the next 2 years. So its shares are down about 0.5% in London. Over to currencies, the Bloomberg Dollar Spot Index up 0.1%. Want to point out the euro down 0.2% at 104.22 against the dollar. And the Japanese yen up 0.1% at 151.86 against the dollar. The 2-year yield 4.30%, little change. And the yield on the 10-year 4.57%, up 1 basis point. That is your Bloomberg Business Flash. Paul and Tom.
So one of the biggest things Ken Pruitt and I fought about is he'd say Renault, and I'd say, no, it's called Renault. When we were kids, it was Renault.
I'm going with Ken.
He'd go nuts.
No,
Ken would go absolutely mental. And then Porsche was even worse. He got gray hair over. He'd say Porsche.
Yeah, you have
it's
to.
It's a Porsche.
No, I think you have to go Porsche. That's what Matt Miller tells me. I don't know.
Freya Beamish, we won't ask her that. We won't waste her precious time on that with T.S. Lombard, and she joins us this morning. Freya, I've got to go to an immediate audible with you, with your knowledge of the Pacific Rim in China and all the work you've done over the years of excellence with Charles Dumont and Shaleva and all. Freya Beamish, to cut to the chase, how does China perceive this political turmoil in Europe?
Yeah, I think from the Chinese perspective, that there's even some kind of talk there of China being involved in the the discussion between Russia and Ukraine. So it's a question of, in a sense, trying to get into Donald Trump's head. And as an analyst, that's always a kind of a risky thing to do. At the moment, one has to have an assumption, and at the moment, the assumption is that he kind of sees the world as chaotic, and he plays to that chaos. In which case, there's a lot. It makes sense to take any kind of opportunity. And so, while you're never going to see, Pandora's box for the U.S.-China relations is very much open. You're not going to kind of go back to a sort of a yay, globalization is great type of a world. Maybe there is a little bit more scope there for China to sort of take advantage of that opportunism, to the extent that it actually kind of can be perceived by Trump as beneficial in some way.
Freya, yesterday, not once but twice, people came up to me and alluded to the 1930s. And I don't want to get dramatic here and emotional and all that, but how do markets adapt to international relation, foreign policy upset?
Yeah, we have to just, as an economist, I have to take a big step back, and that's a difficult thing to do as a human. But I think we have to sort of look at what's the macroeconomics of this. The macroeconomics is from a European perspective, a 3%, 4% of GDP defense spend is something that is scary from the perspective of, any high school student knows that an arms race doesn't tend to end well. But at the same time, that would be a positive thing for the prospects of fiscal federalism, addressing some of the issues of Europe's shortcomings as a currency bloc. And that comes hand in hand with the German elections that we see coming down the pike on Sunday, and the talk of reforming the fiscal debt brake. So really what these kind of global imbalances at heart, for us, they are driven by policies in Europe and China to suppress domestic demand and to grow through external demand. Not across the board, but that's certainly a big kind of driver there. So if we see a reorientation, both in terms of Chinese policy and European policy towards domestic demand, maybe that turns things around and turns around the capital flows quickly enough, because it's not the trade flows, it's the capital flows that are the driver of the U.S. trade deficit.
Paul, I just did a fitted study of the DAX, the roulette wheel of Europe, the German stock exchange, like a moonshot up. It's pulled back dramatically to, on trend, being up 1.4 standard deviations. It's barely pulled back. That's amazing.
It's had a nice move since July and August, certainly. So, Freya, what is your thought here as tariffs and discussions of tariffs on a global scale seem to be front and center for at least President Trump and his administration? How does that impact your economic outlook?
So tariffs have three different roles within the Republican toolbox. They first of all are a negotiation tool, then they're a fiscal policy tool, and then they're about how do you actually rebalance the U.S. economy from a domestic standpoint. And I think from the perspective of negotiations, not so much in terms of like frilly kind of concessions that you get on the telephone, but actually the effect that the threat of tariffs, the effect that also the kind of the defense issues that I mentioned as well, the effect that has on the domestic policy of Europe and China could be beneficial in reducing capital outflows from Eurasia to the US. And that, for me, is the root cause, going back to sort of Charles Dumas' work as far back as 2005, identifying that savings glut. That is the root cause of the imbalances that we see in the US economy. So actually, the threat of tariffs is much more important than the actual imposition of tariffs, which I think could be a out-and-out negative when you net everything out, and there's a lot to consider there, in the sense that tariffs are the wrong form of industrial policy. Some form of industrial policy is necessary because we're not living in what economists like to call a first best world. We're living in a world where there's a lot of policy distortions coming initially, let's say simplistically, from Eurasia, and so the US has to respond with that. But if you're going to respond with a tariff policy, which is a negative supply shock, that's perhaps not the best way of responding, as compared with the tax breaks and sort of subsidies that are a positive demand shock, which then feed into the sort of the high pressure economies that we think are good for productivity growth and that have put the US on a better track since the pandemic.
Are you concerned that tariffs, maybe even changes to US immigration policy, could have an inflationary impact on the U.S. economy, maybe the global economy?
I think in the first instance, you will see that coming through in the numbers, and that could be the point when markets start to worry. I think in terms of the sequencing of this, in the first kind of use of tariffs, it's about negotiation, and therefore markets can sort of ignore that. Where you start to get more worried is when you come towards the reconciliation bill and you start to think about tariffs as a source of fiscal revenue, which seems to be necessary in order for the Congress to get past the bird rule. So there needs to be some form of tariff revenue there, which then comes through in the inflation data in the first instance. From a longer term perspective, I'm not convinced that tariffs might actually be demand deflationary, because you're reducing supply and then demand has to counterbalance down to supply.
I'm on that edge too. I think the demand side is just as interesting as all the other babble going on. Freya Beamish, thank you so much. Hugely valuable this morning with T.S. Lombard, really synthesizing in the politics and the economics going on right now. Paul Sweeney and Tom Keene for you across the nation this morning, and of course on YouTube as well. They had a meeting yesterday with the YouTube people.
Really?
We have YouTube. We have TV people.
Yep.
Now we have YouTube people. Sure. They don't wear ties.
No.
They don't wear bow ties. They don't even wear dress shirts.
Vests. Yeah.
They're very big on T-shirts.
Yep.
And probably in Brooklyn bands. Yep. Like one of them had on a light, sweet, crude T-shirt with their tours dates on the back. And that's the way YouTube rolls. We say good morning. Subscribe out to Bloomberg Podcasts this morning on YouTube. So much going on. Really can't say enough about it. Tyler Kendall to be with us here in a bit. Early morning in Florida, where the president will give a speech tonight. And of course, also what's going on in the markets. For Global Wall Street, Mike Mayo on banks.
Yep.
And Edward Morse on oil will be with us for extended conversations later. Really a treat for Global Wall Street to get started. I didn't realize it was Wednesday.
I know.
It's a holiday shortened work week.
It's a holiday shortened week, absolutely.
I love it.
It's perfect. We should do it more often.
What if we did 4-day work weeks and everybody was work from home on Monday? Would it be a better world? Lisa Mateo chiming in. Would you like to chime in?
Yes, that
Lisa,
would be
as
fantastic. So then we can have a real weekend, because Sundays we get up so early that our Sundays are cut short.
Exactly.
This is a treat. We had Angela Stent on, I think it was 4 or 5 days ago, on these events, these momentous events wrapped around Ukraine, and definitive and current now with a huge success of her book, Punishing Putin. Stephanie Baker joins us. The book is on the economic challenges. Dan Tannenbaum to be with us later from Oliver Wyman on this. But today, much more Stephanie Baker on the state of our transatlantic and Russian relations. Stephanie, let me cut to the chase. Here's where we are in America. NBC had yesterday Mr. Trump commenting that Ukraine started the war. Ian Bremmer of Eurasia Group, as he's wont to do, says not only did they not start the war, Russia did, but he takes it back to Crimea in 2014. What does Mr. Putin do next to his advantage?
Well, he seems to have convinced Trump that all of his talking points are actually true. Everything from it was Ukraine's fault, not Russia, that actually invaded Ukraine in 2022 and annexed Crimea in 2014. But he also seems to have persuaded Trump of this Putin talking line that Ukraine's President Volodymyr Zelenskiy is an illegitimate leader and there needs to be elections. Zelenskiy was elected in 2019, and there hasn't been a presidential election since then because of the war. Elections are not allowed in Ukraine because of martial law, and Zelenskiy and others have pointed that it's impossible to hold an election, a free and fair election, while the war is ongoing. And this is really an attempt by Putin to undermine Zelenskyy's legitimacy, which has been his long-term aim.
In your wonderful book, you have key players up front. And folks, it's names from another time and place. Boris Johnson of the United Kingdom, Jonathan Black, who was Prime Minister Johnson's assistant. Who are the checks and balances now within this process? Does Secretary of State Rubio, for example, have a voice, Stephanie Baker?
He does, but he seems to be falling in line behind Trump's, historic shift in the U.S. relationship with Russia. His spokesman, Rubio's spokesman yesterday talked about laying the groundwork for economic cooperation and investment opportunities that will arise as a result of the ending of the war in Ukraine, which makes it sound like they're ready to reestablish economic ties with Russia. So beyond just the possibility of lifting sanctions as part of any deal, which is a kind of remarkable statement while Trump is threatening tariffs on the rest of the world, that they would actually be talking about trying to, talk about economic cooperation with Russia, which is just, a phenomenal turn of events. It's a real worry. The Biden administration's policy towards Russia of isolating Russia, imposing harsh sanctions on Russia, had its flaws. But at this point, right before Trump came into office, the sanctions were finally beginning to bite, and it appears that Trump is about to give Putin sanctions relief and get him out of a bind, because I think Putin really would like some sanctions relief to regroup and rearm to take another bite at Ukraine a few years down the line.
Stephanie, what do we know about the ability of Ukraine to take a significant role in any peace negotiations that do, in fact, take place between the U.S. and Russia?
Well, Trump has said that down the line Ukraine would have a seat at the table, but I think there is real concern that the broad outlines of any deal would be agreed between the U.S. and Russia without Ukraine participating, and that it would be sort of a fait accompli by the time Ukraine is included or other European countries are included. And remember, Zelenskiy doesn't have a lot of leverage here. He's very dependent on U.S. Military aid in particular. And the Europeans can't really step up in any real way without U.S. military logistical support. Even if the EU is able to step up financially to help Ukraine, they really need the U.S. on board for any kind of what they're calling a tripwire force that would be possibly put in Ukraine to enforce any deal that is eventually agreed.
Stephanie, let's go to your comparative politics at LSE. And the basic idea is, whom do we watch? For our listeners and viewers in America, who is the European you would focus on to see a cogent European response?
Well, this has been part of the problem, is that there hasn't been a clear leader in Europe driving the response. And remarkably, it looks like it is Keir Starmer, just, the UK Prime Minister. Despite Brexit, he's come out and has been, the only country really to forcefully say he would commit UK troops to the so-called tripwire force in Ukraine, but he has said that that would require U.S. support and security guarantees to be effective. And he's expected to go to Washington to meet Trump next week. His relations with Trump seem to be on fairly good ground. So it ironically looks like it's the UK as one of the strongest military powers in Europe.
What do the adjacencies do? Poland. I guess the Baltic states are somewhat adjacent. I don't have my Stephanie Baker map out, but what do the Eastern Europeans think of all this, Stephanie Baker?
Well, they're very worried for obvious reasons. The Biden administration sent 20,000 extra troops to Poland and the Baltic states after Russia's invasion of Ukraine in 2022, and there's concern that Trump might pull out some of those forces or move them. Trump said last night that he wasn't planning on doing that, but that remains a concern. Poland rejected the idea of sending any kind of peacekeeping tripwire forces to Ukraine, saying that they wanted to protect their own borders, that they didn't have enough forces in order to do that. And I think that's the big overarching question is, does Europe have the troop numbers to be able to deploy forces in Ukraine to enforce any agreement, because the numbers needed to police the 1,000-kilometer front line are enormous, because it's not just troops on the ground, but you need to have enough to rotate in and out.
Our people will talk to your people, Stephanie Baker. We'd like to see you daily. Stephanie Baker, definitive book right now, Punishing Putin, out. And again, Dan Tannenbaum of Oliver Wyman will be along shortly to really give us the real world of immediacy of Stephanie's wonderful book. Paul, what I learned there is, do we know what's happening tomorrow?
No, I
don't think we do.
No, and one of my questions is just one of my observations is, where is Congress in all of this? I mean, we understand that the executive branch has a primary responsibility for international relations, but where is Congress anywhere in any of these issues? I don't know. I haven't heard a peep out of either party, and so we'll assume everything is okay.
Henrietta Trey's yesterday, I thought was brilliant. She says, pull it all forward. It's February, whatever it is today. And she said, pull it over to the middle of March.
Yep.
Congress has to show up the middle of March. We show up with a data check. The VIX pretty much on 15.42. Paul notes elevated yields. The Sweeney yield 4.30. All the way up 30-year bond 4.79%. That TIPS comes out 2.10% on the 10-year real yield. Some dollar strength. I'll call it fractional. Euro, maybe that's the ultimate litmus paper here off ruble, 104.28. On YouTube, and subscribe to Bloomberg Podcasts from New York, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures pretty much treading water. Traders turning to more economic data today. Also minutes from the Fed's latest interest rate meeting. Housing starts 8:30 Wall Street time, and then Fed minutes revealed later at 2 p.m. Wall Street time. We'll start with NASDAQ futures. Little change, up about 11 points. Dow futures down 0.1%, 64 points. S&P futures little change, down about 3. The 2-year yield 4.29%. That's down 1 basis point. The yield on the 10-year 4.56%, and that's up 1 basis point. To commodities, have to point out spot gold because it hit a 52-week high. Spot gold now at $2,934 an ounce. We go to oil. Brent crude $76 a barrel. And the Bloomberg Dollar Spot Index up about 0.1%. Few stocks on the move this morning. We'll start with Shift4 Payments. It's off more than 10%. The reason why, well, it struck a deal with Global Blue. That's a shopping service provider that works with retailers like Nike and Prada. Global Blue up about 17%. Then you have shares of computer networking company Arista Networks down 4%. The reason for this is because it relies heavily on revenues from Meta platforms, so now that is in focus. And then finally, shares of online dating app Bumble taking a tumble, down 17%. Posted a weak forecast for the current quarter.
Swipe right, swipe left.
No, that's a different one. It's okay. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash.
Lisa Mateo, thanks so much. We have a star-studded group today. Gina Martin Adams is with us, I believe.
Yep.
Yeah, and Michael Mayo
Yep.
on banks will be with us. Edward Morse, legendary on the political economics of oil. I did a thing with him at the Council on Foreign Relations a number of years ago that was spellbinding. Could talk to them for an hour. But this is the most important interview of the day. What you got to understand is most titles in the investment business are not like some think tank thing from senior management. They're mostly decided in a Starbucks, like at 240 Greenwich downtown. She has the greatest title of anybody on surveillance, head of investment strategy in equity advisory solutions at BNY Mellon. That can only be Alicia Levine. I have never seen the divergence of opinions. Like literally, I'm not exaggerating, never. What is your equity advisory solutions in this chaos?
So long and strong, but you're right. It has been a relentlessly frustrating year. There's a lot of fear about tariffs and policy and the speed with which unusual suggestions are coming out of the White House. I'll just call it that. And yet we just had one of the greatest earnings seasons in a long time. Earnings up about 16% for the fourth quarter. Okay? And the market's saying, what are you all yapping about? Okay, what are y'all yapping about? Don't forget.
There's a lot of yapping.
There's a lot of yapping. We yap. But it's earnings, it's growth, and it's margins. We know this, right? And it's interest rates. This is what drives markets. So I love the conversation. We live for the conversation. That's what we do. But essentially, we're looking at the fundamentals and we say, it's good that there's a two-way market this year. I like the two-way market because last year when everyone was on the same side of the boat, oh, there's no recession, no hard landing, it's great, Fed's going to cut 7 times this year. There's room for error there, and I prefer investing in an environment like this where
Paul,
there's back and forth.
Can you see this, folks? On YouTube, you can address this. Alicia Levine, did you get the white blazer from Taylor Swift? Is that? Are you wearing the YSL white blazer today?
I got my own style.
Okay,
yes, there you go. Great answer.
Paul.
Alicia, so you talked about earnings coming in strong. It seems like this is a market that has to have earnings because it doesn't seem like the Fed's going to do a lot for us this year. How confident are you that earnings can, in fact, come through this year?
So I think earnings can come through this year. We've seen some degradation in the last week or two. I think this is management saying, we're just not giving guidance right here, right? I think that there's just a reluctance to go all in because nobody knows what the policy is going to be. And so just leaving a little bit of wiggle room for an arbitrage on what size tariff, 10%, 25%, which country. What we'd like to remind our clients and the market is the U.S. has a massive trade deficit with Europe. If there are tariffs, our trade partners suffer more than we do. It's fascinating to me that Europe's outperforming the U.S., by the way, on this. And the question you have to ask yourself is how sustainable is this? Because in the end, we've slowly just increased our imports from Europe, and rather than having a trade surplus with them. That's what the market is sussing out. And in the end, the hit to earnings on one round is not going to be that high. Now, if there's retaliation, that's a very different story. But the market's telling you that it does not believe the White House, essentially, on this.
Technology. Is technology going, and the Mag 7, but just broader tech, whether it's chips or whatever, is that going to continue to be the leader in this market? Or is this market, is it broadening out? Does it need to broaden out?
It feels more cyclical to us.
Okay.
So I think that the Mags, look, the top 10 stocks are 37% of the index. Now, everybody's losing sleep over this. It's the most concentrated market ever. You know what? There's more concentration in Japan. Right. There's more concentration in Germany. Okay, so concentration of the top 10 is nothing unusual, nor is it fatal. I do think that there's just a breather here, and some of the some of the multiple has to just sit and have the earnings grow into it because the earnings are still very good.
Alicia Levine with BNY Wealth with us. We welcome you on your commute across the nation on YouTube. Subscribe to Bloomberg Podcast. Alicia Levine has prodigious math skills, which she likes to hide, but the fact is she's got massively outstanding chops. So let's go there right now. When you look at the 4 cross moments, forget about the fancy stuff like kurtosis and the rest. Just look at the variance that creates an intelligent Sharpe ratio, where you're getting a risk-reward payoff 12 months out, 36 months out. To diminish variance, do I want to be less diversified, more diversified? Do I want to do factor or sector analysis, or is it every individual stock for itself?
So I think this is a great year for individual stocks.
Thank you.
Rather than the index. That is a healthy market, right? So that makes for an interesting market. But that's the two-way conversation. I think that's where you want to be here, but that doesn't mean you...
Well, no, go ahead, continue, please.
But that doesn't mean you just discard overall diversification. Diversification is the important smoothing out of returns. And we've had clients that said to us last year, why am I even in overseas markets? Why should I bother with diversify, like, ex-US developed? And we said, well, you have to, because the valuation is so extreme that there will be a day where there's some, resolution of this. And you want to be in the market. And the only way to do it is to be in it.
Right. And Paul, what's important here is Katie Greifeld's wonderful story on Vanguard and the index funds. Did you see those numbers?
Yeah.
I mean, everybody's going away from Alicia Levine.
Yeah.
That's all there is to it. I mean, they're all index.
Alicia, how about some sectors if I want to go find some value in the U.S. market outside of technology? What screens well for you guys these days?
So we love industrials. We love financials here. I mean, financials are a really interesting story.
Am I buying JPMorgan, Goldman Sachs, that kind of thing? Or am I...
Well, I can't talk about specific names. So we like overall. I think that the capital providers, the alternative capital providers, they're taking a pause here. There's a reason they rallied after the election, because you're going to see more activity, friendlier face at the FTC. This is all good for financials. Listen, if you lessen the regulatory burden, that sector becomes less of a utility and more of a growth sector again. And then the multiple changes. And in the end, it's not just the earnings moving higher because of it. It's you get a better multiple. And we think that's sustainable here.
Mag 7?
Mag 7 is going to be, well, it's been the lag 7.
Okay, for a cup of coffee, it's been the lag 7.
For a cup of coffee.
You look for 3 years.
So 3 years, yeah. I think
Alicia doesn't drink Sanka. Let's be sure on that. It's Lily. It's like Illy or whatever.
Yeah,
fancy,
it's all those.
European
But look, the Mag 7 needs to at least be in line. In other words, it can't massively underperform the market in order to get to the place where we think the market is.
Is your securities research at BNY Wealth suggesting they will underperform?
Not that it'll underperform. We still think you have massive earnings and massive margins.
And cash flow.
And cash flow. Look, I sat here many times talking about the cash flow margin. So the question is, does all the spending on AI crush that cash flow margin? It does on the margin. The market lives in the second derivative. It lives on the rate of change. So to that, you could get some just sort of flattening out of performance, but that doesn't mean it's over, and it doesn't mean it's 2000.
30-second audible. Alicia and I bust our chops about education of offspring and that. What's the tip point of $100,000 a year tuition? When do people just say no?
They're not saying no.
They're not saying no.
The market's up 58% over the last 2 years. Real estate's up 45% in the last 4 years. No one's saying no.
Alicia Levine, thank you so much. Absolutely brilliant. Thank you. This morning, she's with BNY Wealth. It's got a title that I don't have it memorized, folks. I got to look here on the screen. Eric to the rescue. BNY Wealth Investment Strategy Equity Advisory Solutions. Thank you, Alicia Levine. Michael Mayo, Edward Morse for this. Is Gina Martin Adams joins on the equity markets and also important discussions on the moment in Europe. On YouTube, subscribe to Bloomberg Podcast. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From
the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, well, just struggling to build on yesterday's close after the S&P 500 hit a new all-time high. We'll start with S&P futures. Little change, down about 4 points. Dow futures down about 0.1%, 71 points. And NASDAQ futures, little change, up about 6. We have the 2-year yield, 4.29%. Little change, and the yield on the 10-year, 4.56%. And that's up 1 basis point. The Bloomberg Dollar Spot Index up about 0.1%. And we have Bitcoin up more than 1% at just over 96,000. Few companies making news this morning. Elon Musk's social media company X, well, it's in talks to raise money from investors at a $44 billion valuation. Now, that's the same price he paid for it back in 2022. We go to Commerce Secretary Howard Lutnick. He named his 2 eldest sons 3 company deputies to run Cantor Fitzgerald. And finally, Howard Hughes said he'll evaluate a revised $900 million offer from Pershing Square. That is your Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thanks so much. Paul and I are celebrating great conversation today. Good morning out on YouTube. Alicia Levine just on fire here on the markets. Thank you so much with BNY Wealth. Now we're going to rip up the script. Daniel Tannenbaum's with us, definitive on sanctions and all that, but nobody's talking about sanctions right now. In your note, Dan Tannenbaum, you go right to the heart of the matter, as we just talked to Stephanie Baker on her wonderful book, Punishing Putin, which, you know, you're I think you're in it, like page 22. There has to be a check and a balance, whatever anyone's politics. There has to be, whether you're Republican, Democrat, you don't care, a check and a balance. I got Jack Reed of Rhode Island on the Senate Armed Services Committee. On the other side, I got Joni Ernst of Iowa with 23 years of active military duty. Are they going to be, the Senate Armed Services Committee, are they going to be the check and the balance to what's going on right now?
I think one can hope. You've seen Senator...
Hope is all you got?
Well, I mean, hope is honestly as best we got these days. You've got Senator Wicker, who came out off the back of some of Secretary Hegseth's comments saying these were kind of rookie moves. You've seen criticism from the Armed Services Committee on the Republican side of preemptive lifting of sanctions. It's clear that this could be a red line for Republicans in the Senate of any sort of preemptive actions to ease the burden of Russia and the global community. Even the comments of Russia should re-enter the G7 was met with a resounding no from Republicans in the Senate over the last few days.
Do you and Oliver Wyman believe the tip point here is the middle of March with various federal discussions, or does the Senate Armed Services Committee have a different calendar?
I'm not sure that this is really on the Senate Armed Services Committee at this point. We're all just reacting to the deluge of different policy decisions, views, depending on who is speaking on the administration. And frankly, it's changing on an hour-by-hour basis. Even Secretary Rubio walking back a few hours ago that sanctions won't be lifted in advance of any deal being made, only after a deal being made. But it does seem like this administration is overly concerned with Russia relative to Ukraine, the country actually being invaded at this point.
How about what will be the role, do you believe, of Ukraine in these negotiations? Presumably Ukraine and maybe even some other European partners have to be involved for the implementation of it.
You would think so, but looking at what's happened this week, it really does seem like you have actors that are acting as if the country that's the subject of the invasion doesn't need to be part of this. Now, I do think Ukraine has to agree. You still have President Zelenskiy, who is popular domestically, regardless of the messages coming out of the White House. And Ukraine law doesn't allow elections, for instance, while martial law is declared. So there's some domestic impediments that the U.S. government, the White House, needs to take into consideration as it's calibrating next steps.
So do you believe the next step may be a sit-down with President Putin and President Trump?
I really hope that President Trump sits down with President Zelenskiy before President Putin. I think that sends a better message. I was on with Creedy and Ann and Guy last week in London, and your friends in London.
Oh, in London.
And some of the first message out was that Trump spoke to Putin before he spoke to Zelenskiy. That says a lot. And it's important to note that Congress, and actually one of the last moves by President Biden, was to make it more difficult for sanctions to be lifted unilaterally without Congress's involvement, and that is not popular in Congress.
Well, there's a
right
chart
now.
out today showing that the sanctions, because no fault of Dan Tannenbaum, the sanctions were sort of moldy and really didn't work. Then all of a sudden they clicked in. But I've got to go back to what I read at Bloomberg, what I read in Bloomberg Opinion, what I read at Axios, and the rest. Dan Tannenbaum, with all of your abilities, like Hugh von Steenis in London, with your ability at Oliver Wyman, where in God's name, whatever anyone's politics, is the checks and balances of Madison?
I think we're about to see some of those checks and balances as the administration calibrates what to do now. There's been so much mixed messages on this topic in the last week. And let's remember, we're coming up on Saturday on the 3rd anniversary of this invasion, the second invasion of Ukraine, to be clear. I think we're about to see checks and balances come forth. In 2017, Congress enacted one of the most striking bipartisan pieces of legislation to make it difficult for President Trump to lift sanctions on Russia that existed from the 2014 invasion.
Well, I need to interrupt. This is too important. Out on YouTube live chat, thank you. On live chat on YouTube, I love it. Raise your hand if you think Americans want their kids dying in Ukraine. Didn't think so. So there's an isolationist view. We don't want to go over there. So what's the alternative, Dan Tannenbaum, to an arch-isolationist view?
I think there was never a view that American troops were going to be deployed on the ground, but continuing to provide weapons. We heard overnight that there were limited air defense resources to strike down missiles. I mean, Odessa was without power last night as a result of Russian attacks. They need military support, but not in the form of boots on the ground.
Next steps.
Honestly, this is the real question, Mark. You've got a desire to meet with President Putin. You've seen General Kellogg is on the ground in Kyiv today, meeting with Ambassador Brink, meeting with the Ukrainians. But remember, he wasn't in the discussions in Riyadh this week.
Exactly.
So it is very unclear who is driving these discussions, frankly.
Great brief. Can you come tomorrow?
Sure.
Can you show up tomorrow? I'm kidding. Dan Tannenbaum, thank you so much with Oliver Wyman. Just really can't say enough about his commitment to explaining some of this arcane stuff to us. This is what it's about. Stephanie Baker and Dan Tannenbaum.
Right there.
Back to
punch.
back.
Yep, very good.
It's like too much. I can't stand it. Mike Mayo, Ed Morse with us here coming up later. Red on the screen, ever fractional futures -2. Tannenbaum lifts the market is what I see this morning. With our news in New York City, John Tucker.
And Secretary of State Marco Rubio says the U.S. will keep the sanctions on Russia at least until a deal is reached to end that conflict. Rubio speaking to European allies after joining other U.S. officials in Saudi Arabia for the highest level face-to-face meeting with Russian counterparts since Moscow's invasion in 2022.
We haven't really had much engagement with the Russians for almost 3 years, and it sets the table for future conversations. How that turns out will be up to the parties and their willingness not just to make commitments but to live by them. That'll be tested in the weeks to come.
Secretary of State Rubio says an end to the war would open, quote, incredible opportunities to partner with the Russians. Investigators from the National Transportation Safety Board, FAA, and Canadian aviation officials are reviewing Monday's crash at that Delta regional jet at Toronto Pearson International Airport. The plane's cockpit voice recorder and flight data recorder have been recovered. They're also talking to passengers and crew. John Nelson was among the passengers.
We hit the runway extremely hard and we kind of popped up and it felt like we were leaning to the left. There was a giant firewall down the side. I could actually feel the heat through the glass. And then we were going sideways. I'm not even sure how many times we tumbled.
It's the fourth major aviation accident in North America in the past 3 weeks. Nearly 24 people were injured in that crash, but all 80 on board escaped Flight 48 with their lives. Hamas says it's ready to exchange its remaining Israeli hostages for Palestinian prisoners. It would come in the second phase of the Gaza truce, leading to what they call permanent ceasefire and Israel's full withdrawal from the enclave. And the Vatican reporting the diagnosis for the pontiff is more serious than originally thought. Pope Francis is now fighting pneumonia. The 88-year-old had a CT scan, which showed that he has an infection in both of his lungs. He had part of his lung removed when he was a younger man. Global news, 24 hours a day, and whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom, Paul, Lisa.
John, thanks so much. Need to do a data check. Paul, I'm looking at dollar fractionally stronger here. Euro, I guess, is a litmus paper of the modern system, 104.27.
I'm trying to get parity for you, Tom, in the euro. So the next
Not
time
there.
you're over in Paris
Yeah.
or Rome, you're going to have, a stronger dollar. But still, the dollar's been really strong relative to everything else.
And the parity, I'm glad you bring it up. The parity thing has sort of drifted away.
Yeah, it
A
has.
little bit.
We're sitting here at
Yeah,
104.
Drifted away. I mean, there it is. We say good morning. Ed Morse and Mike Mayo coming up from New York City for Global Wall Street. This is Bloomberg's Surveillance.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Good morning, everyone. Paul Sweeney and Tom Keene. Did you see that one of the interns did our what we call billboards, our messages today?
Yeah.
And they did them for Lisa Mateo eyesight.
Only.
I get the goggles out here to tell you the daily look at the front pages, the Lisa Mateo moment. It's brought to you by IBKR. Will the average U.S. temperature in February 2025 exceed 36 degrees Fahrenheit? IBKR forecast trader, the yes, was recently at 44%. What's your take? Trade your prediction at ibkr.com/forecast. Lisa, what do you have today?
All right. Well, we know President Trump has been warning of steep tariffs on European goods. So the Wall Street Journal has this interesting article because they're saying it's going to be a blow to Bernard Arnault's LVMH empire. So they go into the connection between the two because they say he's trying to kind of work those ties to try and avoid the tariffs. They do. Back when they were up-and-coming property developers in Manhattan. The families know each other. You have his Arnault's second oldest son is friends with Jared Kushner. You have Ivanka, friends with Arnault's daughter. Arnault was at the inauguration ceremony.
They're just friends because they want a bag. I mean, Ivanka goes and goes, I'll take that one.
Not too bad.
Well, Rich Go has Bernard Arnault, number 5, 196 billion.
Ooh.
So that's good for him.
They got some real challenges right now, though. I mean, I believe
they do because China's sales fell. Yeah.
China, and there's some other issues as well. And the real angst here, which I read in Le Monde in France, is they've basically businesses had it in France with the taxes. And the real relationship here is Arnault's bait to put manufacturing in Texas.
Oh.
And, I don't know what products, not Tiffany jewelry, but something.
Interesting.
Manufacturing. And I mean, do you want to buy a Louis Vuitton bag that says made in Texas on it? Does that take the charm away,
Lisa? It does
Lisa?
take it away. It does.
Next.
It does. Okay. We'll stick with kind of luxury. The Neiman Marcus century-old flagship store in Dallas, you mentioned Texas, it's going to shut down.
Really?
The owner of Saks Fifth Avenue made the announcement. Okay, so what stands out is because it comes after they just announced that they were acquiring Neiman. This big merger happened in December. The store apparently going to close March 31st. It was in this memo from Saks Global. It was seen by the Post. So they received a notice from the landlord to terminate their occupancy. It doesn't have to do with acquisition, the source is saying. It's saying it has to do with kind of a tiff with one of the building's multiple landlords over a certain piece of property. The corporate, offices above will stay there, but the store will close.
Dallas is a booming market. Well, Texas is booming overall. Wow.
There's good morning to all of Chestnut Hill in Boston and the Smith family at General Cinema. That was the glory years for needless markup. And what Richard Smith and his kids did there. They really husband the image forward. And I don't know how many owners it's been through since General Cinema had them, but the answer is it's a whole new world. I don't get department stores. Do you, Lisa? Do you spend a lot of time?
I don't know.
It's too
overwhelming.
Costco's not a department store, right?
No, definitely not.
Okay.
They have limited selections, which I like. Okay, so not sure if any of you have either had overhead bin experiences that are just gone wrong on an airplane before.
Third rail with me.
So apparently there's this battle for the carry-on space. I've seen it. People shove their bags in there, try to fit it. You have the other people who kind of toss it in, first class or economy plus before they hit the back.
Good strategy.
They kind of do that too. It's delaying the process. So people are complaining. So the Wall Street Journal came out with the proper etiquette and what the rules are and what you're supposed to do. So you're supposed to put the larger carry-on in the overhead bin, the smaller item under your seat, because a lot of people take the smaller item. See, there you go. Yep. You're one of them.
Yep.
You put the smaller bag in the overhead bin, don't you? That's what you do.
Yeah, well, what I've noticed, even on the 737, all the overhead bins have been refurbished so they're much bigger. So your big roll-on thing doesn't lie flat; it lies on its side, and you can get more of them in there. So they've actually, I think, improved the whole overhead thing because they know nobody's checking bags because that's a disaster.
I don't know where the airlines are. The whole thing's solvable in one day. That's the thing I don't get. It's like we all have problems. Like the Red Sox, middle relief is a problem. Baggage on airplanes is not a problem. Speaking of problems, there's a hockey game tomorrow night. Sire, are you taking off Friday so you can watch Canada-U.S.? We're playing Canadian music today. Stephen Stills to come. You start up in Montreal and Quebec with Alanis.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, Michael Barr, and a Simon. I was delayed there because I was talking to Edward Morse, who will be with us in a moment. Edward Morse is acclaimed in hydrocarbons and the political economy of hydrocarbons. It is our interview of the day. Good morning, Paul Sweeney. I mean, the markets, aren't we supposed to have uglier markets given all that's going on? And we don't.
As Alicia Levine said, I mean, these are markets that want to move higher. The economy is solid. Earnings, very solid. And earnings have to be solid, Tom, because it doesn't seem like the Fed's going to do a whole lot for us this year.
There's like almost no Fed discussion.
It's like, which is fine.
Should we do the Fed decides the end of March? Maybe
exactly.
Take the show off as well. We say good morning. Let's do this. Let's get right to it for YouTube and for your commute across the nation. Edward Morse coming up here in moments with Hartree Partners, iconic at Citigroup. From the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
And we've got little movement in futures this morning. This is after more tariff talk, possible levies around 25% on cars, chips, pharmaceutical imports. Because of that, I want to start with global auto stocks because they're edging lower this morning. For example, Volkswagen down 2% in Germany. You have Renault, Mercedes-Benz down 1%. So S&P futures, we'll start there because they hit a new record yesterday. Right now, down about 5 points. Dow futures down 82 points. NASDAQ futures down about 4. We have the stock 600 index pointing that out because it's down about 0.6%. That's after a gain of around 10% so far this year. Some of the reasons why: you have Glencore off about 7% in London after profit fell. You have HSBC, their shares down about 0.5% in London. It said it's going to incur $1.8 billion in charges over the next 2 years. We go to currencies. The Bloomberg Dollar Spot Index up about 0.1%, pointing out the Japanese yen up 0.1% at 151.82 against the dollar, and the euro down 0.1% at 104.32 against the dollar. Finally, the 2-year yield 4.29%. That's little change, and the yield on the 10-year 4.56%. That's up 1 basis point. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. We've spent a couple of weeks trying to get him in here. He's with Hartree Partners. Edward Morse is absolutely definitive on hydrocarbons. Think of Daniel Yergin's The Prize. Ed Morse shows up about page 23 in The Prize from a few years ago. Definitive at Citigroup, and of course now with Hartree Partners. When was the first time you were in Riyadh?
It was in the late 1970s.
With Faisal? With King Faisal?
Yes, but I didn't see him at that point in time.
What is the okay, fine, but what is the strongest difference now between the royalty of Riyadh as they look out at this maelstrom versus our stereotype of Saudi Arabia?
So the Saudis have come a long way. They're looking at how to keep the public happy. They are trying to diversify their economy as quickly as they can. And it's looking to the future rather than building on the present or the past.
What is their relationship with Russia, this idea of OPEC plus? Is it what's the distinction of that relationship?
The relationship is kind of critical. Think about where the Saudis are, where OPEC is. The Saudis have a production capacity today between 11 and 12 million barrels a day. That's what they had in 1980. Wow. 1980 was a long time ago. OPEC's production capacity then was around 32, 33 million barrels a day. Today it's 35, 36 million barrels a day. The oil market was then 60 million barrels a day, and today it's 100 million a day. So they discovered that they could not on their own balance the market. They could not put a floor under prices, and they needed to expand. And they had the opportunity to do so in the middle of the last decade when we had volatility across the planet. And a lot of that volatility was a result of the two fastest growing oil producing countries in the world, Russia and the United States. They were looking in the middle of the last decade, actually around 2013, just at the time before Russia had its first invasion of Ukraine, and they saw that the production growth was 1 million barrels a day in both countries. If you look back a couple of years, and they decided to bring prices down. They thought if they could bring prices down to around $70 a barrel, they would see the world lose 2 million barrels a day of oil, and it didn't happen.
Paul, I want to mention this. Everyone was looking for 100, 110, 120,
yeah, sure.
And there was a lone voice at Citigroup, a bit grizzled. I mean, Edward Morse, a bit older, saying, maybe not. He nailed the move to 70.
So, Ed, how do you think about Russia as a global supplier these days? Because it seems like just in the last few days, things are changing when you think about the Trump administration, how they're viewing Russia. Do you expect Russia to be a bigger global supplier? I'm not sure where that oil went in the first place.
It all depends on when you're talking about, what your horizon is and what could possibly happen. And you have to remember that it wasn't that long ago. It was 2019 when Putin visited Russia, visited Saudi Arabia right after the attack on the Abqaiq facility, and said, listen, we're going to be cooperating with you through your Aramco IPO, and then we're going to be out on our own. And Sechin, the CEO of Rosneft, said right after that IPO, we're out on our own. We are going to be growing oil production at home and abroad. They have right now the Vostok field in northern Siberia, and that field it's scheduled to produce 2 million incremental barrels a day. they are awash in oil, and they need to do something about it.
So President Trump says, "Drill, baby, drill," and we don't want to waste time on that. But what we can state with Edward Morse is oil a weapon for the United States in our geopolitics?
Oil is certainly an important part of the foreign policy in the country. It cannot be weaponized other than the degree to which you can put sanctions on a country. I don't know what weaponizing it means. I don't know what we're going to pursue energy dominance means. I know what it means as a soft, powerful instrument of policy. And let me give you an example. We have become the largest exporter of energy in the world, the largest exporter of LNG. That LNG export growth enabled the United States to replace every drop of Russian energy, but particularly natural gas, going into Europe. And it did so at a time when it was able to globalize a gas market that had not been globalized. We have made oil, because we don't allow destination restrictions, we've enabled natural gas to be global, and the price of it is based at Henry Hub in the United States. That's kind of soft diplomacy. We have an ability to expand LNG globally, but it's a soft ability. We have an ability to say multilateral lending institutions ought to be pushing natural gas. They ought to be backstopping regasification. It's cleaner than coal. It's helpful to the global economy. But that's soft diplomacy. It's not using it as a weapon.
So talk to us about the demand side of the equation. I know when you think about some of these commodities like global oil, you really have to have a call on demand. What do you think demand is over the next year or two?
Brilliant question, but even more brilliant. Do you drive an EV?
Got to tell you, I did drive an EV until we moved back to New York full time. And then I discovered that it was too expensive to have a car to deal with actually the rush on garages right at the edge of the zone where New Yorkers didn't want to go south of.
So coming up, Edward Morse on the congestion tax. Paul, continue with your good question.
So what is your demand view here over the next year or two?
So as we know, there's been a difference of demand views between people in this country, between OPEC and the EIA, OPEC and the IEA. Demand is kind of very simple if you look at it historically. We've had a regular drop in the oil intensity of GDP around the world, starting at the really end of the post-World War II growth of road transport in reconstructed Europe, reconstructed Japan, and in the interstate highway system in the U.S. We've had year after year a drop in the percentage of demand growth per unit of GDP growth. Now, that doesn't mean that oil demand comes to an end. It means it slows down.
Okay.
And to give you an example, if we go back to 1970, 71, for every 1% increase in the world in global oil demand and GDP, there was a 1.1, 1.2% increase in oil demand. Okay. Today it's about 0.3 to 1. So if we have 3% global GDP growth, we have 1 million barrels a day on a 1% base on a 100 million barrel a day market of oil demand. And that's continuing to slide. So think of it as we're not going to have much more than 1 million barrels a day of demand growth.
We're thrilled to have with us today Edward Morse. Of course, you know him from Citigroup at Hartree Partners, now definitive on the geopolitics of oil and also, of course, pricing of oil. Do you have at Hartree, are you allowed to have a Brent guess? Do you have an oil barrel guess, or is it a folk spot?
No, it's not a problem. We live in the most volatile market the world has seen. Based on things that are out of our control. We don't know what's going to happen here and there. It's a relatively evenly balanced market, but for the fact that OPEC, going back to your first question, OPEC Plus has taken so much oil out of the market that it now amounts to 8 million barrels a day. That's a lot of shut-in production capacity that can come on. And if we look at the volatility today, we have prices going up, in part because of the drone attacks on the CPC pipeline coming out of the Caspian, bringing Russian and Kazakh oil into the Mediterranean. We have an announcement from Kurdistan, from Baghdad, that the pipeline from Kurdistan through Turkey into the Mediterranean is going to be revived next week. That's gonna we've lost maybe 300,000 barrels a day out of the CPC pipeline. We'll get perhaps 300,000 barrels a day out of Iraq unexpected by next week. So, given that volatility, we think oil is in a range. The range is 68 to 78.
I assume it's gauche, that's French, gauche of you to do buy, hold, sell right now. I don't want to buy, hold, sell in big oil, but how do you position big oil when I see Chevron announcing massive layoffs, massive restructure, and it's weak double-digit return over 30 years. Is big oil prosperous? Is it thriving? Is it the stereotype of our youth?
Well, as we know, some big oil is prospering and some big oil is not prospering. Maybe for some investments that they were making in the past, in the recent past, in the drive to go heavily into renewables and into things that weren't providing the same level of return. But look at the production growth of Chevron, the production growth of Exxon on a global platform based in part on the United States. They're increasing their output. They're increasing their output of oil and gas in a world in which they're very competitive.
Ed, talk to us. I'm watching the television show Landman, about the life in the oil patch in West Texas. So I now consider myself an expert on global oil and gas here. Talk to us about the U.S. We're now a net exporter of energy. What is our role in the global energy market vis-a-vis, say, maybe like an OPEC Plus or something?
We have transformed the energy markets of the world, including the oil market. If you go back to 2010, we were a gross importer and a net importer, and our production base, if you add NGLs and other liquids, was around 8 million barrels a day. The last month for which we have data, our production of liquids was 23 million barrels a day. We have moved from being the largest gross and net importer of the world to being the largest gross exporter. We export 16 to 17 million barrels a day of liquids. That's more than the combined exports of Russia and Saudi Arabia. Our production is more than the total production of Russia and Saudi Arabia combined. And we've become a net exporter on the order of magnitude of 4 million barrels a day. So that has made the basic difference in the global market. It's a wild difference. It's what gives the U.S. leverage.
I'd love to get you back in here on a 6-month, 3-month basis, Dr. Morse. Let me ask you one final question, and it's sort of from 60,000 feet and philosophical. How bad did Angela Merkel screw up? I mean, within the arch of Edward Morse's tenure, owning the high ground on this, how bad did German leadership screw up from Adenauer forward?
So my personal experience in it is dealing with the effort by Germany to become dependent on Russian gas. So I was in the State Department at the time that the big
serving
negotiations
both Carter
took
and
place.
Reagan.
And the U.S. and France were the only NATO countries that said, hey, you've got to look at, you Germany, have to look at dependence. Yes, you can import gas, but think about what it will do to your foreign policy. Think about what leverage you've lost in terms of that dependency, your inability to say no. And we saw that over time, and I think Germany has really learned that lesson in terms of being very reluctant as they go through this election process this coming Sunday. Almost all of the parties are reluctant to do more than say we might consider importing oil on a spot basis, but not on a full contract basis.
30 seconds. Does Tesla have a future?
I think EVs have a future. I'm not going to pick one versus another, but they're fun cars to drive. They're cleaner than other cars to drive, and they're getting more and more mileage. So if I were to buy a car again, I would certainly not hesitate to buy a new
There we are, the endorsement we need. Edward Morse, thank you so much. Thank you for joining Bloomberg and Bloomberg Surveillance today. Dr. Morse, of course, there in the tumult, the maelstrom that is oil today. Around the world as well, affiliated, I should say, with the Council on Foreign Relations and, of course, with Hartree Partners. Let's get to it quickly with our news in New York City. John Tucker.
All right, thanks, Tom. President Trump says he would likely impose tariffs on automobile, semiconductor, and pharmaceutical imports of around 25%. An announcement could come as soon as April 2nd. It's a move that would represent a dramatic widening of the president's trade war. He also says what he has done so far is having the intended impact.
I've been contacted by some of the biggest companies in the world, and because of what we're doing economically and through tariffs and taxes and incentives, they want to come back into the United States.
President Trump has previously announced 25% tariffs on steel and aluminum that are set to take effect in March. The federal cross-cutting effort known as DOGE says it saved $55 billion in federal spending so far, but the Department of Government Efficiency's itemized website only accounts for less than a third of that. It does raise questions about their accounting. Investigators looking for clues on how a Delta flight flipped over while landing at Toronto's airport Monday. At least 21 people were hurt, including a child. Investigators now going through the debris piece by piece, looking for clues. The cockpit voice recorder and the flight data recorder, they were sent to a lab for analysis. John Nilsson was one of the passengers.
Everybody was quiet for like a moment or two, and then everybody was trying to scramble to make a sense of what just had happened. And so we released the seatbelts that kind of fell to the floor, which is now the ceiling.
At the time of the landing, winds were gusting up to 40 miles per hour. And a blast of Arctic air has a lot of the nation continuing in this deep freeze. Let's get the update this morning from Bloomberg meteorologist Rob Carolyn.
John, bitter cold will continue to stretch from the Dakotas into portions of Texas. It'll make its way into the Gulf Coast and eventually portions of the southeast by tomorrow. We'll be looking at some spots watching their temperatures run 50 degrees below normal today. Now, out ahead of the cold air, we've got a storm system that'll bring snow to parts of Tennessee, Kentucky, Virginia, and North Carolina today.
Bloomberg's Rob Carolyn. ASAP Rocky dove into the arms of Rihanna as a court clerk read the not guilty verdict at his trial on 2 felony counts of assault with a semi-automatic firearm. The Los Angeles courtroom, full of fans of the hip-hop performer and his singing superstar partner, exploded into screaming glee. After a 3-week trial, the jury deliberated for just 3 hours to reach the verdict that spared Rocky a prison sentence. Global news, 24 hours a day, and whenever you want it with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Tom, Paul, Lisa.
John, thanks so much. Okay, the Durham Devils is a student-athlete support club. I learned from surveillance name, image, likeness reporter Emily Grafeo yesterday. How much is the basketball player at Duke making from
I haven't seen a
NIL?
hard number. It's in the millions, Tom. It's in the millions. It's whatever he wants. He's got deals with major brands.
Is it taxable income? Because the way I read it's like...
I'm sure it is. Yeah.
I don't know. I
think what's interesting, these name, image, and likeness, it's funneling money from the thousands of dollars levels to the millions of dollars, depending on who you are, what position you play, what sport it's in. But real money is now flowing to these quote-unquote amateur athletes in college. And, a lot of folks argue that's the way it should be because they are the ones that generate all this billions of dollars of revenue for these universities. Why should they not get a piece of it? Now they are. And the question, though, is, okay, we need some regulation around this, though, because it's kind of the Wild West out there.
It's the Wild West right now, you would say.
Yeah, it is.
I agree.
And it needs some, so some people are saying Nick Saban, the former coach of Alabama football, should be the general manager of the NCAA football operations, and so he could, create some type of mechanism to regulate this a little bit. Maybe Coach K for NCAA basketball. We need some
quickly here, at St. John's in New York, there's some basketball players making NIL.
Yep.
There's so many questions here, folks. I've been remiss on this. I've been really out to lunch. Grafeo really, and you turned me around yesterday on this.
Emily knows what she's doing. Yep, NIL.
We'll do more on this, folks. I promise. We'll get some guests in here for good conversation. Was that great with Ed Morse?
Oh, fantastic.
Just absolutely definitive. The Dean, truly the right phrase. From New York City, it's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, we've got futures lower this morning. This is traders turn to more economic data. Minutes from the Fed's latest interest rate meeting. In just a few moments from now, we'll have housing starts, and then later this afternoon, we'll get those Fed minutes. So we'll start with NASDAQ futures down 0.1%, 33 points down. Futures down 0.2%, 100 points. S&P futures down 0.1% or 10 points. The 2-year yield 4.31%. That's little change, and the yield on the 10-year 4.57%. That's up 1 basis point. To commodities, have to point out spot gold because it hit a 52-week high right now at $2,937 an ounce. We go to oil. Brent crude $76 a barrel. WTI crude $72 a barrel, and the Bloomberg Dollar Spot Index up about 0.1%. Shares of Etsy, they're down 5% this morning. Revenue missed estimates. That's the reason for that. Then you have Occidental Petroleum swung to a quarterly loss. Sales declined. Shares are down nearly 1%. And luxury home builder Toll Brothers off 5%. Fourth quarter revenue. Total home sales also fell short of estimates. And finally, online dating app Bumble down 18%. Weak forecast for the current quarter.
Just go to a bar. Do it the old-fashioned way. Come on.
Listen to you.
Exactly.
Into that. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. I'm Lisa Mateo. That is your Bloomberg Business Flash.
Okay, we got to do this quickly. Lisa, thank you so much. And, you know, the Emiletti coming up, we got to do this. I mean, you look at Three Brothers Farm in southeastern Wisconsin, the organic eggs in Rio and Marcelin. I mean, you know, Wisconsin, I mean, it means eggs. She probably has the cheapest eggs. Let's start with this. Lisa, I get the large eggs. Which size do you buy at Costco?
The jumbo ones, but Costco only had the brown ones, actually.
You buy jumbo eggs.
I buy the jumbo ones.
Why don't I buy those? Are they like a better deal, Paul?
I don't know.
They're just a little bit, I like them. They're a little bit bigger. And
They're
I got a hungry kid at home.
Okay. Michael McDonald killing on this with his bacon, egg, and cheese index.
Yep.
Extra large jumbo Lisa Mateo egg prices warehouse.
Yep.
Are you ready? I did a moving average study. I mean, Emiletti would understand this. A 3-band George Kleiman exponential moving study.
Oh boy.
And eggs are up 228% annualized. It's been so sudden. They're up 955% per year from when they broke higher. And what should the price be in the stores now? Like $16 for a dozen eggs?
It's ridiculous. I just paid $8.50 for 24 eggs, which I thought was pretty good.
Yeah, I think they're eating the stores are eating it to keep us happy. Joining us right now, she loves Three Brothers Farm eggs in her Wisconsin. Ann Milletti joins us with Allspring Global Investments. Are eggs stupid priced out in Wisconsin, Ann Milletti?
If you can find them, they are very stupid priced everywhere, Tom. Yes, they are.
It's fascinating, and that goes to inflation and investment and the shocks there. Do you see a stability here in value investment, or is it as crazy as egg prices?
Yeah, you know, Tom, it's an interesting time because we are seeing, you know, as you guys so well reported last week's economic data, we are still seeing some pretty sticky inflation out there. And while it is painful for consumers, especially the lower income consumers, it tends to still be a little bit positive for some of the companies. And so I think we are still seeing pricing power. As Lisa pointed out, you know, people are still buying the eggs if they can find them, regardless of the price. And it is still giving some power to hold up wages as well. And so a little bit of inflation is still somewhat positive overall for the economy. I think the fear is, can we keep it here and still trend lower, or is there a risk that it will go higher?
Hey, and as we think about these markets, boy, 23, 24, we had, you know, the S&P 500 up more than 20% in each of those years. How do you set up for 25? What's the conversation with your clients this year about 2025 and equity returns?
Yeah, it's interesting, Paul, because, you know, people are excited about the market. We're seeing equity investments or investing into the equity markets kind of at near high levels. Almost 59% of people invested in equity markets, which is not always a positive sign. But there is fear out there that this is not sustainable. Fear because we're seeing a lot of change with the new administration. Fear because we're not quite sure where we are in the economy and where some of the new policies might lead us, but not enough to pull people completely back. We have a really strong economy, but valuations are full. So we think there's going to be a bumpy ride, but we do believe investors should stay invested.
On value, and we've been talking to Lisa. What'd you say, Lisa? Jumbo eggs only brown?
Yeah,
what's wrong
only
with
brown,
brown
and they have
eggs?
the limited sign, limit only 2 per customer.
Oh, yeah.
You can only take
I've been
2.
living with that. Ambiguity, I look at Costco, which I believe used to be a growthy value stock. It's trading it with a PE multiple of 62, which trades like a French luxury company. The thing is a complete moonshot, 23.9% per year. What does value Mileti do with the growthiness reality of Costco?
Tom, it's, that old saying, I think, is so true. Value is not necessarily the price you pay, but the value you get. And I really believe that to be true. Can these companies deliver? And I think there's no more important year to prove that than this year. Multiples are at high, at near all-time highs for a lot of industries. So companies that are executing and can deliver on earnings will be rewarded. And we're kind of seeing that even now as companies are reporting Q4, earnings, growth has been really strong. But along with that, what we're seeing is companies lower forecasts for 2025. And so while people expect it mid-teens growth for earnings, it's looking closer to more like 10, 11% growth. Still good, but within that group, there's going to be companies that have really strong growth, and then there's going to be some that just can't grow at all. And so I do think this is time to be a stock picker and really focus on bottom-up fundamentals.
And that's the focus, I know, of Allspring Global Investments. And how about small and mid caps? I mean, is this finally a time for small and mid cap stocks to perhaps outperform?
Paul, I think it is. I think the one risk, and we're kind of seeing it this year play out a little bit, is whenever you have fear that interest rates could potentially go higher, small cap underperforms.
Right.
And so if we can really believe that we're in an environment where rates are stable here to trending down, small and mid cap companies will outperform. And we're starting to see that. You're starting to see, especially that mid cap space, that sweet spot, the larger small cap to small mid cap companies, they're really starting to show really good growth and outperformance. But they need, in order to get that multiple, we need to make sure that interest rates really are kept in check.
Ken Rosenthal writes about the Milwaukee Brewers today. I mean, Mileti, are they going to do it again where they just sort of cute with a payroll and they got Christian and, they've got a few other players, but they just sort of piece it together to excellence? Is that what you see for this year for your Brewers?
Well, Tom, we hope so, but we lost a great one in Mr. Baseball out there, so we're going to be missing a big piece of the Milwaukee Brewers this coming year.
Did you ever meet Bob Uecker?
I have not met him personally, which was a bummer, but he's such a legend in Milwaukee, and it is still today. So it was a big loss.
For our international audience, in honor of Mileti, go to YouTube and look up Bob Uecker. Uecker.
Yep.
His Hall of Fame speech is the single best speech in sports history. Willie Mays in tears, laughing. Right. I mean, that's how good it was. Mileti, an honor to speak with you on value in this just crazy equity market. Always and forever was strong. And of course, with Allspring now, Mileti on value. Where is value in the market, Paul? I got Costco at a 62 multiple.
I know.
There's no textbook ever. I was looking at Wal-Mart at a 30, and it was outraged.
Yeah, I mean, it just seems like value every once in a while, for a cup of coffee, as you would say, Tom, has its time in the sun. But boy, is it a short-lived for value to outperform. It just seems like a market. This has been a growth market for as long as I can remember.
On the Bloomberg terminal, you can go to the DES screen, the description screen. Mike emails in and says, Tom, sell DES. Okay, so you go there for Costco, and you got a 62 PE. The Walmart PE was 30, and it's now 42. So Walmart's a value compared to Costco.
Yeah.
Lisa Mateo, why is Walmart a value versus Costco? Do they have eggs at Walmart?
They do, and sometimes you have to go there because everybody else is out.
Because Walmart,
That's what I learned.
As Jen Bartashis from Bloomberg Intelligence told me a few years ago, the #1 grocery chain in America is Walmart. I never would have guessed that.
Yeah.
See the value add from Bloomberg surveillance you get? One guy, Mike, emails in and says, Tom, sell the terminal, and we get it done with a DES screen.
Yep.
It's amazing. PE. And then you can do like a 1-year look forward PE. I don't understand that. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, struggling this morning. To build on yesterday's close, this is after the S&P 500 hit a new all-time high. We'll start with S&P futures down 0.2%, 14 points. Dow futures down 0.3%, 132 points. Nasdaq futures down 0.2% or 48 points. The 2-year yield at 4.30%. That's a little changed, and the yield on the 10-year 4.57%. That's up 1 basis point. The Bloomberg Dollar Spot Index up about 0.1%, and we have Bitcoin up about 1.5% at just over 96,000. Few companies making news this morning. We'll start with iPhone parts maker Murata, weighing whether to move some of its production capacity to India. Then you have a big move in the gaming industry. Pokemon Go maker Niantic said to be in talks to sell its video game business to Saudi-controlled Scopely. It's potentially for about $3.5 billion. And finally, EV maker Nikola filed for bankruptcy, plans to liquidate its assets after entering Chapter 11 in Delaware. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Our economic studies through the week, and of course in this shortened holiday week, our economic indicators, they're brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth. They do it with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to Commonwealth.com to learn how. Paul Sweeney and Tom Keene are waiting for Matthew Lazzetti. He's with Deutsche Bank. Paul, Robert Schiffman, huge response yesterday to his Mag 7 financial analysis, comes back today with Apple's cash, take away Apple's debt, and they've still got 40-some billion. They're getting down to where they want to be, quote unquote, cash neutral. They're getting there.
They're getting there. It's amazing. And one of the things we love about Schiffman and Bloomberg Intelligence is our commitment to credit research, Tom. And the sell-side investment banks have more or less kind of pulled back almost completely from credit research. And that's
this is a really important point. Why is this important? You and I live the credit people see earlier than the equity people. Do you agree with me on that?
Oftentimes in a lot of industries, that's true. So when we created Bloomberg Intelligence, we said we're making a big commitment, not just to equity research, but also to credit research. So Joel Levington has put together a phenomenal
Yeah, he's
team
okay.
of credit research analysts. Schiffman's one of our best doing that TMT stuff. But yeah, he calls out these big tech companies
He's been
like
on
Apple.
fire.
And, again, they've got a lot of debt, but they've got more cash and a ton more free cash flow.
They keep making
Yeah,
it. Of
it's
course,
amazing.
he mentions this thing, I don't know, EBITDA.
Yeah.
Is that how you pronounce it?
Yeah, I think it's cash flow. We'll just call it cash flow.
I don't know. It's somewhere on one of the 4 or 5 accountant statements that are there. Waiting patiently, Matthew Lazzetti joins us for too short a visit right now. He is with Deutsche Bank. I have never talked less about the Fed in the last X number of weeks. Does Peter Hooper snooze off at meetings? I mean, are you bored stiff covering the Fed right now?
Look, it's a remarkable period for the Fed. They just...
Good or bad?
I think it's a good period for them to be on the sideline, and that's kind of what they are indicating. They're indicating this extended pause. We'll get the minutes to the January FOMC meeting this afternoon. I expect they confirm that extended pause messaging. But look, they, like many investors, are waiting on policy decisions on tariffs in particular, fiscal policy as well over the summer. And that'll be the driving force for macro markets in the Fed as we look ahead.
Do you read the minutes, or do you have some intern from USC that you say, go read the minutes?
No. The PhD economist from UCLA is the one that has to read those minutes. So I sit down right at 2 o'clock. I look at the headlines from Bloomberg, what is being flagged there. And then right after that, we dive into the policy discussions that they're having. I'm interested in what the Fed staff is forecasting, how that forecast has changed. Last time it was actually really interesting because the Fed staff marked up their inflation forecast so that they had zero further progress this year. I think that was an indication of how much tariffs they were building in, and they were informing, I think, the Fed officials on that.
So in terms of inflation, is that still the primary focus of this Fed? And if so, are they comfortable, uncomfortable with where inflation is?
Yeah. So I think it depends on where the labor market is. Okay. I think when you go back to the summer months and what triggered that 50 basis point rate cut, they will say it was a lot about the progress on inflation, but I think at least as importantly than that, it was worries about the labor market. At that point, you had the unemployment rate had risen to 4.3%, payroll gains were slowing. And so what we've seen from the labor market over the past several months, stabilization, if not a re-acceleration in payroll gains. The unemployment rate has come back down. Having confidence on the labor market, feeling there's less downside risks there, the Fed shifts back to thinking about inflation. And there, the progress has just been a lot slower than hoped for. And even the latest, inflation data, the CPI, much worse than expected. But you've got better data out of the PPI.
The history of UCLA economics is a real respect for ambiguity, microeconomic foundations. I'm going back. I'm worried about tariffs because to me, it's all this discussion about politics and OMG, what's Paul's BMW going to cost? And to me, it's a redux of the 30s. In 1938, in the second recession of the Depression, U.S. real GDP decreased 10%. No one's looking for that gloom. But it's the shadows out there that the Peter Hooper team sees. Is it reduced GDP off all this tariff discussion?
Yeah, I think absolutely. If we view those policies in isolation, it has reduced GDP. We marked down our growth forecast by 0.2 this year based on the tariffs that we were anticipating. We talked about if you got 25% on Canada and Mexico, we would reduce our growth forecast by 0.5% more. So we do view this as an adverse supply shock that in the short term reduces growth and lifts inflation.
Okay, let's go British. What about the middle term? Next year, 2026 is next year.
Coming up.
Wow.
Yep.
God, I'm old. 26 or 27, there's got to be a long-term impact.
So we have a negative growth effect from trade over the next 2 years, and in part because we expected this universal baseline tariff to come in next year. It is quite possible we just have a front loading of all these tariff effects. They are talking about reciprocal tariffs. Canada and Mexico, April 1st is a really important date where they're going to be reporting on all of their investigations they're doing on the trade front. So I think that will help to inform things. But there is an important macroeconomic discussion about can you get medium-term benefits from the trade actions that are taking place. And I think in part that will depend on what deals are made. Does it lower barriers? Does it open up more markets to U.S. goods? Does it help to bring back manufacturing, employment, and investment to a certain extent? And those are really important questions that we probably should be more focused on.
Do you take into account, longer term, are tariffs, do we know, what's the academic literature say about tariffs? Positive, negative, no impact on the economy?
So I think they would have a reasonably nuanced view. I think historical experience has told you targeted tariffs can have benefits for economies in particular periods or industries in particular periods. So infant industries, as you're trying to build up infant industries, they can be really helpful from that perspective. I think if you're trying to build up critical supply chains or critical industries, they can be helpful in protecting those industries. At the same time, we're looking at an economy that is globally integrated and coordinated, and so breaking down that integration can be, I think, quite painful, and it no doubt raises prices for U.S. consumers and businesses in the short term.
What will the Fed do? I mean, to me, the Fed gets a huge pass at the next meeting. Am I right?
They do. And the market's basically priced for nothing. Their communications
Right.
are that they can wait for a period of time here. So March does not look like it's a period where they're actually actively
We
considering
didn't have you in to talk about this. Paul's all on lather. The Big Ten includes UCLA, number 6 behind Maryland. Maryland's in the Big Ten.
Yeah.
Oregon's in the Big Ten. Thank you, USC. I mean, the travel, it's still...
So there's like
the
softball
realignment
team
has been...
and the field hockey team, they're traveling back and forth across the country all the time.
It's amazing.
Crazy.
Is it good? I don't think it's good. Don't they have to get home and study for something?
One would think. My focus has been on Villanova basketball in the Big East at the moment, and they had a tough loss last night against
They got
UConn.
crushed, yeah.
They were winning by 14 with about 11 minutes left and ended up losing.
Well, but to you too. I mean, Paul's been great on this. His leadership in St. John's. Big East basketball is sort of back this year, right?
back.
St. John's is back. Yep. UConn, after back-to-back national championships, has been a little bit down, but Creighton looks great at the moment. Marquette is really good.
But we got to get Villanova back.
We need to get Villanova back. The past 3 years have been disappointing.
Shows you how important your coach was.
Absolutely.
Remember the romance of like Big 8?
Yeah, sure.
The Cotton Bowl and Big Ten.
Colorado, Nebraska football. How big was that?
Oh, yeah. I lived it real
Yeah,
time.
totally.
I
Yep.
just...
Gone.
It's gone.
It's a new world.
I mean, Northwestern's in the Big Ten. That's all American. Penn State's in the Big Ten.
Been there.
There's
Been there
not
for-
10. There's like 40.
No,
It's
there's
like the Big 40.
Yeah, exactly. It's
Okay.
Big Ten. It's going to change even again. It's going to be like, you know what's going to be like, Tom? English Premier Soccer. They're going to be relegated up into the...
I like the
big leagues,
relegation thing.
And then relegated down.
The Tots may get relegated.
Yep. So that's how it's
Matt
going.
Lozzetti, thank you so much. Thank you for not talking just Fed stuff, because I just want to get rid of the dots. Should we get rid of the dots?
They're talking about communications as part of their framework review. I think, unfortunately, if anything, they probably think that they would enhance the dots, so they would tie the dots. Tie the dots to the economic forecast,
go.
so you can better identify different individuals.
Matt Lozzetti, thank you so much with Deutsche Bank there on the dots. Futures deteriorate, -11 from New York City. This is Bloomberg Surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene with you. Michael Barr and assignment. A huge response to Michael Barr on the Minnow, down in the Caribbean somewhere. He's got a 3-island tour.
Yep.
He's doing it well. Robert Schiffman was in the other day. We're trying to get him daily here. He's paid by the syllable, so it works out.
It works out good.
Robert Schiffman with us now with Bloomberg Intelligence, writing this morning, and this comes up all the time. Cash, and then you take away the debt, and that's called net cash. And Apple's different. Robert Schiffman, why is Apple different from the other Mag 6?
Well, I'm happy to be here. Luckily, credit and Bloomberg Intelligence is my life, so I'm here 24/7, always happy to step in.
You've got a pup tent up in the food court, right?
I do live
You
on.
sleep there.
I do live on Bloomberg Snacks.
Yeah, well, that's what we all do.
Our drawer at home is full, but the kids keep reloading. So
I had an
gets me back to
intern
the
once,
office.
Tanya. She had 2 drawers full, just in case. Jesus.
Yeah, those are
okay.
deep.
Okay, tell me about Apple here. Are they different from everybody else?
They actually are. Their balance sheet is a little bit different. One is they've got more cash than anybody.
Yep.
It's a lot lower than it used to be, but it's still 141 billion. They also have a lot more debt than everybody else. They're sitting on 97 billion. That's actually also lower than it was. The real big difference between Apple, though, and the others is they're not spending the sort of money that others are spending. If you look, yesterday we were talking about CapEx and how I said everyone should be spending more, and borrow more to spend more to make more. Apple's only spending about $10 billion a year in CapEx. And that's why their free cash flow is so much higher than everybody else's. And that's ultimately why they're buying back so much more stock than everybody else. So they're a different animal. I do think people worry a little bit about Apple because, like we've seen with just about every other historical legacy technology business, at some point, it just goes away. It becomes a dinosaur. And how long can you keep making better hardware products? What Apple's done that's differentiated from everyone else, though, is they layer on top software and services, and their ecosystem is so deep. I just don't think that's disappearing anytime soon, and you can tell that by a $3 trillion plus valuation.
Every time I bump into Tim Cook down on the Duke campus, I say the same thing: dividend. Give me a 2 or 3% dividend yield, and he always just brushes me off. As a credit analyst, as a bond holder, you don't want to see a dividend, do you?
Well, when I bump into Tim Cook, usually he says, "Please get out of my way." So do I want to see a dividend? Honestly, I don't really care. I mean, they pay about $15-odd billion a year in dividends relative to $100 billion in annual free cash flow. It doesn't matter so much. I actually wish, though, they had something else to invest in. But, they don't need to. So unlike others, they actually have, they're a AAA rated name.
Yep.
And they actually have credit targets, which is they want to be net cash neutral. That means the same amount of cash and debt. And that number has also been shrinking, but it's still about $45 billion. So
What's
it gives
the
them a lot.
x-axis on that? When did they hit that?
Listen, 5 years ago when they came out with it, we said it's going to be over an extended period of time. And that number, though, has gotten smaller and smaller. I still think it's probably a 3 to 5 years out. But again, like we talked about the wine yesterday, they keep reloading on more and more free cash flow. So it's going to take an extended period of time. No one's going to worry about that.
I went back as an amateur and looked at the share buyback aggregate of Apple. It's got to be nonlinear. As they retire shares every year, it gets tougher and tougher 5 years from now, 10 years from now, 20 years from now to make that effective.
It's funny. Yesterday we talked about $1 trillion number for Amazon's top line. What we highlighted is that within the next year, Amazon's total shareholder returns, dividends and buybacks, since they started this program, is going to breach $1 trillion this year. So yeah, it's the law of large numbers. As you get bigger and your cash flow gets bigger, you need to give back more. But it's all relative.
Do you have quickly here? Do you have in your head the percent return, like a preferred almost, of dividend, share buyback, cash management of Apple on January 1st?
It's not so much a percent. It really has to do with absolute numbers. As that absolute number continues to go up, it's just going to go proportionally with it.
Robert Shipman, thrilled. Thank you so much. It's brilliant work on credit, Mag 7. We're doing Canadian music today. You got to do Bruce Coburn. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr are on a three-island tour in the Caribbean. Lisa Mateo with us. And Paul, we just got a vignette there of the tensions here at Bloomberg LP. When you have credit and equity at Bloomberg Intelligence back to back, you have to have handlers that can keep them apart.
Exactly.
Because they're really they're not on speaking terms.
Rob Schiffman right into Gina Martin Adams. That's a smooth transition.
I looked out in the corridor here with our entourage out there, and Gina Martin Adams, not Gina, of course, she was cool, calm, collected. One of her assistants, total cow that she was following Robert Schiffman. What is that about?
I know, exactly. I mean, she usually gets top billing. But we'll make it work. We'll make it work. She's top of the 9 o'clock hour, let's put it that way.
Top of the 9 o'clock hour. Maybe she'll stay around. This is really important, folks. Seriously, this is what we do. Paul Sweeney had so much to do with it. The basic idea here is you got to link your credit research into equity excellence. And to go from Schiffman over to Gina Martin Adams is what Bloomberg Surveillance is about. Futures deteriorate, -13. The 10-year real yield. I got to do this for Schiffman. He's not full faith in credit, is he?
No, he's just credit.
Ira Jersey, I think, coming up later.
He's coming up.
It's unreal. 2.10% and a 10-year real yield from the Interactive Broker Studios, the Bloomberg Business Flash. Lisa Mateo.
And we've got futures falling. Traders turning to more economic data. Housing starts actually slowed in January after this December surge. Builders pulling back. Single-family, multifamily home construction. Growing worries over mortgage rates. Unsold homes that are blamed. Also, we had those wildfires in Los Angeles. Later this afternoon, we'll get the minutes from the Fed's latest interest rate meeting. That takes place at 2 p.m. Wall Street time. Let's start with NASDAQ futures down 0.1%, 30 points. Dow futures down 0.2%, 118 points. S&P futures down 0.2% or 12 points. We have the 2-year yield, 4.30%. Little changed, and the yield on the 10-year, 4.57%. That's up 1 basis point. To commodities, spot gold actually hit a 52-week high. We go there now, $2,935 an ounce. Oil, we have Brent crude, $76 a barrel. The Bloomberg Dollar Spot Index, that is little change. We have shares of Etsy. They're down 6% after revenue missed estimates. And it was the same story over at fast food chain Wingstop. Their shares off about 11%. Revenue missed for the fourth quarter. And then shares of online dating app Bumble down 20% now after that weak earnings outlook for the current quarter. After the close, we move on to Carvana. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Now joining us, Chief Equity Strategist, whatever, Bloomberg Intelligence, Gina Martin Adams. Do you have Q2 visibility? Do you have a clue what your minions are thinking about for Q2, or do you just throw in the towel?
Yeah, it's very interesting because the analyst community appears to be throwing in the towel, but the company guidance is not necessarily throwing in the towel. It's very interesting to watch how this, especially all the tariff chat, has really played out at the company level, because companies have been quite mum. You have a handful of companies that have suggested, we're spending a ton of time lobbying in Washington, or we might see some deterioration in margins, but it's just a handful so far. Companies have been very quiet, while analysts are saying, oh, yikes, maybe we're not going to have as much growth as we had hoped for in 2025.
Paul, Southwest is not being quiet. Chevron's not being quiet. Those are huge adjustments.
Huge adjustments. So, I mean, how do you think about margins here? I know you guys have always looked at the profit margins pretty keenly. What is your thought here as 25 and even 26?
Yeah, well, I think it's really important to note that PPI has accelerated. Producer prices have accelerated faster than consumer prices for 3 months running. Usually that leads to some degree of at least margin growth slowdown, if not margin compression going forward, which is pretty important toward the outlook. I think you've got these sectors that have just dominated earnings growth in the U.S., though, tech and communications in particular, which have, they sort of fly above the radar of the economic indicators. And so you have to take those independently from the indicators of the economy. And they, too, are right-sizing spending, thinking about competition, new entrants into the space, in particular in semis. So there's just more volatility, whereas from 2023 through 2024, it was just a straight line higher. for most of these companies with accelerating growth persistently, really big movements of expansion and operating margin. And that's slowed down quite a bit in the second half of 2024, probably does continue to slow down in 2025.
I'm guessing tariffs aren't good for smaller and mid-sized companies.
Yes.
So does that put another fly in the ointment for those types of stocks?
Yeah, this is interesting because many people think that tariffs, are likely to impact the target countries, likely to maybe impact the multinational stocks. But I hear a lot of rhetoric to the contrary of what you just said, that, small caps should fly under the radar of tariffs, and nothing could be further from the truth. Small caps also import a lot of product from overseas. So you simply have to do your homework. Now, the difference between small caps and large caps, of course, is nobody seems to be expecting a whole lot out of small caps. Quite the contrary to large caps, where expectations are very high, very robust, and could be an impediment to price momentum this year. Expectations for small caps are pretty grim already. So even to the degree that we do see some pricing pressure emerge, there's not a whole lot of growth forecasted for this group. There's not a ton embedded in valuations. So there still is, in our view, an opportunity for small caps to outperform expectations.
We welcome all of you across the nation in your commute on Apple CarPlay, Android Auto, SiriusXM. Paul turned to me months ago. He said, Tom, SiriusXM is a huge deal. We got the numbers. Wow.
Yeah.
It's like, there it is. 99.1 FM in Washington up to Boston. Good morning, 92.9 in Boston. There's a big hockey game tomorrow.
That's
I've been
right.
briefed.
Yep.
It's like ginormous.
It's big. Yep.
As well. Okay, Gina, I got a company with $250 billion revenue. They're popping 5 cents on the dollar EBITDA. They got down at the bottom of the income statement. They're making 3 cents on the dollar. Okay. And they're enjoying a 62 multiple. It'd be Costco. And they're out of eggs. Lisa told us they have brown eggs.
Yep.
Can you explain to mere mortals, you're standing with a piece of chalk in your hand in Zvi Bodhi's finance class at Boston University. How do you pop a 62 multiple on somebody making a nickel on the dollar?
Tom, a very famous saying comes to mind that markets can remain irrational longer than you can remain solvent when it comes to these things. Valuations are not always a perfect straight line from fundamentals to what people are willing to pay for stocks. This is a very beloved company. Obviously, there's a lot of concentration risk in this company, just like other stocks in the tech sector have become very beloved companies. There is an anticipation that this company will continue to gather market share and drive ongoing growth that is well above what is implied by the analyst community embedded in that stock. That's the only explanation that you can have, is that over the long term, the investment community believes that fundamentally this company will really, truly dominate this space.
Gina's too young to remember this, Paul. Remember the bull, the Merrill Lynch bull, and the China followed the herd.
Exactly.
The guy with that $1 million voice. We at Smith Barney.
Yep.
It is all about sentiment. It's very true. Very
exactly.
true.
I always learn something new reading your research, and that includes today. Decades of building specialized supply chains and trade globalization have led to nearly half of the factories of S&P 500 companies now located outside the United States.
Isn't that amazing?
Wow.
Half. A full half of companies now have their factories, or a full half of factories owned by S&P 500 companies are now outside the United States.
So they got to be. This is a deal. This is serious.
The tariffs are a very important issue to watch. I think we underestimate the potential impact of tariffs because the consensus view is that this president will ultimately only use tariffs as a bargaining tool. That is the consensus view, and we have to keep that in mind. That means anything other than that emerges is likely to be a shock to markets. And frankly, when you're that vertically integrated, when you've had that much supply shift, we have that much specialization, companies are very much at risk. Now, what I will say, Paul,
go ahead,
to caveat this is many of these factories are located outside of the United States to serve markets outside of the United States. So they're sort of self-contained in other markets. So what matters most for most of these factories is actually retaliation. To the degree that you have retaliation, to the degree that you have some sort of pushback on the U.S. locations overseas, to the degree you have tax reform that impacts non-domestic entities, those could be very big risks to companies that are operating with facilities outside the U.S.
And you and your team have screened for these types of exposures. I mean, these are big household names. Philip Morris, Coca-Cola, Kimberly-Clark. These are big
big names,
companies.
Big names, and we're gonna have to do our homework. I mean, again, something like Coca-Cola, Philip Morris, a lot of those facilities are located overseas to serve overseas markets. But what happens with regulations in those overseas markets as a retaliatory response to potential tariff action in the U.S. is a huge risk that we should be thinking about right now.
What else is the big issue for investors? You talk to investors. What's great about Gina Thomas, her institutional investor audience is global. We send her to, Tokyo, fills the room. We send her to London, fills the room. Same for New York and Los Angeles. What are your U.S. clients asking you the most versus your non-U.S. clients these days?
The biggest thing on the U.S. client mind is, why isn't the U.S. outperforming? So there was an anticipation coming into this year, of course, that U.S. exceptionalism would continue to drive performance of U.S. stocks, that we would continue to see improving conditions for U.S. stocks. U.S. is actually the 14th market in terms of ranked performance relative to the top 23 in the world. So we're middle of the road this year for the first time in several.
This year, we're 6 weeks in.
Yeah. So this is a question mark.
I really take issue with this. I'm looking at a stodgy portfolio. I'm not going to mention the name. Now, their 5-year return is 13% per year.
Right.
We have forgotten that if you take, I'll let you decide as a pro, nominal GDP as a proxy, plus X number of beeps, it used to be a single-digit world. We're now addicted to double-digit returns.
And
we're underperforming for 6 weeks.
Totally on it. Yeah, you're on it. Well, and to be fair, the U.S. has also been largely an underperformer since the election. And this is an interesting point. Canada, for instance, greatest performing market after the election. Europe has been a very strong performer since the beginning of the year. So there's been this rotation, this underlying rotation in global assets, and everyone wonders, is this a sign of what's to come? I think that this will be a year in which we start to question the quote-unquote U.S. exceptionalism that developed over the last couple of years. We don't need to have double-digit returns every year. You're absolutely right. A normalized return is totally within the bounds of expectations this year.
Gina, don't be a stranger. Gina Martin Adams, thank you so much. Folks, I'll tell you, Robert Schiffman, Gina Martin Adams, back-to-back is the way we roll. Mike Mayo coming up for Global Wall Street as well. Right now, we dash to Miami. She's smarter than we are.
Yep.
I think it's like 40 in Miami, which is, it's like little eyes. Tyler Kendall joins us in anticipation of a presidential speech. Tyler, what do you anticipate from the unpredictable president of the United States?
Well, Tom, exactly that. It could be unpredictable, but one thing that we do know is that President Trump would like to focus on this idea of increased investment in the U.S. You'll recall that the first week that President Trump took office, he had this phone call with Saudi Arabia's crown prince, who pledged that he would invest $600 billion into the U.S. over 4 years. That was considered to be a pretty substantial pledge, makes up about 55% of Saudi Arabia's GDP. But President Trump said that it wasn't enough. He wanted to see at least $1 trillion invested over that time. Now, experts tell us that that amount of investment is highly unlikely, but it has still helped to reel in some of these big U.S. business leaders here to Miami to hear about potentially how this increased exchange in capital between the two countries could help business interests. And we know that there's a lot of different things on the table here, but there's a general sense that they want to talk about areas of agreement, whether or not that's increased investments in artificial intelligence technologies, advanced manufacturing, for example, or even how Saudi Arabia has now played this role in potential landmark U.S.-Russia talks instead of the areas of disagreement, such as President Trump's proposal when it comes to the future of Gaza or his complaints about oil prices. So it remains to be seen. I did reach out to the White House to try to get us some sort of preview. They told me to stay tuned, but one thing's for sure, we'll be here at 5 p.m. Eastern when he takes the stage.
Tom, 77 and sunny in Miami right now.
77
and sunny.
Tyler does this.
She knows
how to work. She knows how to work the math.
She knows what
she's down by the Gulf of America.
Gulf of America. Tyler, talk to us about the tariff. That seems to, obviously, for our audience at Bloomberg, a big economic issue, a big policy issue. We were just talking with Gina Martin Adams, and she was calling out the risk to corporate America here and to profit margins. Are we expecting to hear anything today, maybe more concrete on tariffs?
Well, at this point, President Trump has told us to mark our calendars for April 2nd when it comes to his announcement that we could see up to 25% tariffs on industries such as autos, pharmaceuticals, chips. That is one day after another day that we have marked on the calendar, April 1st. That's when we're expecting USTR and Commerce to give us their studies when it comes to country-by-country reciprocal tariffs. And if we're just working backwards, March 12th is that potential date for steel tariffs to come into play here. But notably, President Trump yesterday, when addressing reporters, said that he put these dates on the timeline to give our trading partners, quote, a little bit of a chance to try to move their manufacturing into the U.S. That really was one of the first concrete policy benchmarks that we've heard from President Trump since really the campaign trail that could help lessen these tariff threats, particularly as he, up to this point, has really just talked about this idea of just lessening the barriers. But perhaps this idea of pushing into domestic manufacturing could come up, particularly as here at the summit, we know that an increase in investment is something that he's looking for.
Tyler, one final question. What's Secretary of State Rubio doing? I mean, there he was in Riyadh, looking, I guess, a little dour, but you got the advantage of being really inside the political baseball and the Beltway. Give us a report on the Secretary of State.
Well, notably, Tom, Bloomberg News reporting yesterday that Rubio actually went behind closed doors with European counterparts when it came to sanctions to ensure them that they won't be lifted on Russia before a peace deal is enacted. It came after he came out and said that Europe would have a seat at the table for potential negotiations. So it does appear clear that he is trying to help smooth over what had been heightened concerns from European allies as well as Ukraine, that there's been this reversal in U.S. policies when it comes to U.S. and Russia. So Marco Rubio having an interesting role in all of this, both forward-facing for the Trump administration, but also working behind the scenes here to help with European allies and to assuage some of their concerns as these talks move forward.
Tyler, thank you so much. Tyler Kendall with the president in Miami. We'll have much more on that. Look to Balance of Power today with Joe Matthew and Kaylee Lyons. Futures fractionally deteriorate -12. With our news in New York, John Tucker.
All right, Tom, Ukraine's leader, Volodymyr Zelenskiy, says President Trump is living in a Russian disinformation space. Those comments follow yesterday's opening meeting between the U.S. and Russian officials to try to end the war in Ukraine. Zelenskiy was left out of that meeting. Ukraine, he said, learned of the plans for the gathering from the media. President Trump says he's going to likely impose tariffs of around 25% on all imports of cars, semiconductors, and pharmaceuticals. He plans to announce the new charges in April. Trump speaking to reporters at his Mar-a-Lago club in Florida.
It'll be 25% and higher, and it'll go very substantially higher over a course of a year. But we want to give them time to come in because, as you know, when they come into the United States and they have their plant or factory here, there is no tariff. So we want to give them a little bit of a chance.
New levies on automobiles would have sweeping impact on the industry. The roughly 8 million passenger cars and light trucks brought into the U.S. last year accounted for about half of U.S. vehicle sales. Treasury Secretary Scott Bessent said Elon Musk's Department of Government Efficiency is saving the country tens of billions of dollars. Bessent also spoke to Fox News.
I think I saw an estimate today of about $50 billion. So that's a very good start. And I don't think it's unreasonable to think that we could have several percent of GDP that we are saving.
Now, the Department of Government Efficiency claims to have saved $55 billion in federal spending, but its website only accounts for $16.6 billion of that. Doge's accounting raises questions about its reliability and accountability. The Vatican reporting the diagnosis for the pontiff is more serious than originally thought. Pope Francis is now fighting pneumonia. The 88-year-old had a CT scan which showed he now has gotten an infection in both of his lungs. He actually had part of a lung removed when he was younger. Closed campgrounds, impassable trails, and overflowing trash cans. They may be among the sights confronting visitors to the national parks this summer. That's the concern, at least, after the Trump administration quietly fired about 1,000 newly hired National Park Service employees, according to the Associated Press. Global news, 24 hours a day, and whenever you want it with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Tom, Paul, Lisa.
John Tucker, thanks so much. Paul, I look at Alicia Levine, Robert Schiffman, Gina Martin Adams. I mean, the basic idea of what do I do with my 201k?
Right.
Or, Tucker's been on fire. He's got a 501k.
Sure.
We used to open the envelope in tears. Now we're down at the bar. He's having Moet down at the bar.
Sure, absolutely.
Open his 401k.
Well, they now insist
do you have
that
any announcements here? Do you want to retire? Like, we're thinking Friday.
I should have done this about 10 years ago. Lisa, can you fill in for me?
Yes, exactly.
But I look at the divergence here, but they're all saying avoid the noise. How do you avoid the noise?
Yeah, Barry Ritholtz is probably the clearest voice on this, Tom, Ritholtz Wealth Management, when he says we don't think a year or 2 or 3 in advance. We think 5-10 years in advance for our clients. And, that's a great way to look at it if you can. Some people are a little bit older. Maybe they need to think a little bit differently. But if
Why
you can,
are you looking at me?
Exactly. But boy, Tom, and you can sit here at a 10-year U.S. Treasury and get 4.5% just to sit there with complete security.
All we're going to do, folks, is try to bring in the conversation the best we can. To have Edward Morse with us, Michael Mayo coming up. Mike Mayo on the banks. And, for a lot of people like Mike Mayo who are patient, the banks have recently been a moonshot, particularly in Europe. But to have Mike Mayo with us is about the conversation that you need to have. This on economics, finance, investment, and, of course, front and center now, international relations. Futures deteriorate. They ebb away, -14. The VIX not out to 16, 15.73. Maybe waiting for the key economic data that we'll see this morning. From New York City on YouTube, subscribe to Bloomberg Podcasts, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Will the U.S. CPI exceed 2.4% in March 2025? You can trade your prediction with IBKR Forecast Trader. The yes recently at 60%. Buy yes or no and earn $1 if you're right. Go to IBKR.com/forecast. Well, you got futures falling this morning after President Trump said he was considering tariffs 25% or more on cars, chips, pharmaceutical imports. Because of that, I want to focus on global auto stocks because they're edging a bit lower. We have Volkswagen down about 2% in Germany. Renault, Mercedes-Benz down about 1%. S&P futures, we'll start there because it hit a new record yesterday. They're down about 0.2%, 15 points. Dow futures down 0.3%. NASDAQ futures down about 0.1%. Over to the 2-year yield, 4.30%. That's little change. And the yield on the 10-year, 4.56%. That's up 1 basis point. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Paul Sweeney and Tom Keene. What we're going to do is talk to Mike Mayo here with Wells Fargo, briefly go to the market open with Lisa, and come back with Mike Mayo, and then extend that into our next half hour as well. Mike Mayo is absolutely legendary in banking. He's one of the few people that Congress called upon in the great financial crisis to say, what in God's name is going on? And it has finally paid off. His optimism on large cap banks in Europe and, of course, here in America. I have a chart of Citigroup with a 10-for-1 reverse split, cratering from, down it went, and then it just forever, and finally a legitimate leg up. Let's start with that, Mike Mayo. Why is banking finally getting a leg up?
Well, the times, they are a-changin'. And you're seeing historic inflection in terms of the revenues, the earnings, and especially 15 years of regulation going from a headwind to a tailwind. Now, I'm not talking about going back to 2006, 2007, before the global financial crisis. I'm talking about preserving the safety and soundness of the banks and eliminating a lot of red tape. And that can help banks operate at a lot higher profit margin to help their stock price.
Is it operational excellence, or is it the gift of the yield curve?
It's really more just operational streamlining, because regulation has gotten so complex. Pull back that complexity and banks can perform better. But yes, you've had 15 years of financial repression. Zero interest rates were disturbing to banks' profitability. Now you're going back, just back to normal.
So talk to us about how you think the regulatory framework may change and what it can do to returns on equities, for example.
Well, I think the regulatory framework was vastly improved after the global financial crisis. Banks doubled capital. They doubled their liquidity. They de-risked with their consumer customers. Remember all those subprime loans? They de-risked their commercial customers. If anything, banks have been marginalized to the benefit of the non-banks. So a lot of the more risky stuff has gone outside the banking industry. So I would say great job regulators from the year 2010 through call it 2015. But the last decade, you had complexity piled on top of complexity. The living will, the Fed stress test, JPMorgan submits 80,000 pages for each. Jeez. And I talked to the ex-vice chairman of the FDIC. He said he didn't understand it when he reviewed it, and nor did a lot of the banks. So it's a lot of wasted money. So I think you can save a lot of money on expenses at the banks, at the regulatory agencies, and I think some of that gets passed on to the customers. And also, banks deserve to have a level playing field when it comes to how much capital they have. So compute those capital ratios the same way you do for everybody else, and the numbers go up by quite a bit. So this could improve banking returns by 200 basis points over a few years. That's significant, and that can propel a bank stock rally over a few years.
So are there certain banks that are better positioned in this type of environment, or is this a blanket call on U.S. financials?
Well, a rising tide does lift all ships. JPMorgan remains best in class global bank, but my favorite, number one, number two, and number three favorite is Citigroup. I was on your show last year, and it's moved. It's starting to move, but it's still my dominant number one pick. It's a new era for banking, but it's also a new era for Citigroup.
I've got a chart, normalized. We're going to talk about this, folks, with Mike Mayo here at Wells Fargo as we go into the next half hour. I got a chart normalized back to the day Lehman collapsed. I think I maybe talked to you that day. I can't remember. I got a JPMorgan moonshot. When you say banks are going to do well, are they catching up with JPMorgan, or is it all boats rising even for JPMorgan?
I'd say both. So I think the lesser banks will narrow the gap with JPMorgan for sure, but at the same time, JPMorgan should continue to improve. Okay. What a bank, generating over 20% returns on 15% capital with some best-in-class efficiency.
Okay. Let's come back and talk about that because he's wearing a JPMorgan color shirt today. I mean, that's why we've got to do it. Mike Mayo with us, thrilled that he's with us at Wells Fargo. Thank you for Global Wall Street for tuning in today, particularly on YouTube. Right now, the market open with the VIX at 15.94. Lisa Mateo.
Yeah, and investors still unsure how to take the White House's tariff plan, so it'll be interesting to see how we start things off. We'll start with the S&P 500. Right now, down 0.2%, 13.6,115. We have the Dow down 0.3%, 130 points, 44,427. And the NASDAQ down 0.2%, 47 points, 19,992. We have the 2-year yield, 4.30%. That's little change. The yield on the 10-year, 4.56%, and that's up about 1 basis point. We have the Bloomberg Dollar Spot Index up about 0.1%, and leading the Mag 7 this morning is Apple, up about 0.5%. That is your Bloomberg opening bell report. Paul and Tom.
Yeah, Lisa, thanks so much. Mike Mayo with us. So I got JPMorgan, clearly way ahead. 317,000 employees is the working number we've got in the DES screen. There's all this, the stuff Chanel Bassick talks about, all this OMG, who's going to take over for Jamie? Does that germane to you? Is that part of your analysis of JPMorgan, or do you just ignore the people moving around and just look at the financials and the execution?
Well, I think Jamie Dimon, I asked him this question in the last earnings call. I said, Jamie, who's your successor? And he didn't give much of an answer. And
he's been doing that for 10 years.
Well, then I finally said, so are you going to be around for a few more years? He said yes. So I think when you have this many moving parts, Jamie's not going anywhere in the immediate term. Having said that, there's a deep bench at JPMorgan. It could be a number of 3 or 4 different people. Marianne Lake certainly is the name that comes to the fore. Investors know her. She's held a lot of positions. But if Jamie stays on for several years, it's, we'll see what happens. No, I'll say this.
Yeah.
A couple of years ago, I downgraded JPMorgan when they were spending all kinds of money without telling us why they were spending it and everything else. Then I upgraded it, made it my number one pick after the failures from a couple of years ago. But not one investor that I've spoken with, and I've traveled a lot the last 2 months, not one investor that I've spoken with wants Jamie Dimon to leave.
Yeah.
So people want Jamie Dimon to stay right now. And so I think he should get that message and stay. And he's been playing for this moment. I call it re-regulation, not deregulation, re-regulation, making, more common sense regulation. And he's going to benefit. JPMorgan's going to benefit. Why leave now? You've been waiting to go to the ball game your whole professional career. You're finally getting there. You're not going to leave before the first inning.
Get one more in.
Citi. I'm a former employee there at Citi. When I worked there, I felt like there's not a piece of business we couldn't win. What happened to Citi, and why is it now your number one pick?
Well, look, compared to the time you worked there was a dramatic shift last year that's underappreciated by almost everybody. They went from 5 decades of this global matrix management structure that nobody understood, and now they have 5 lines of business. They have payments, banking, markets, wealth, and consumer. But they have a CEO in charge of each. They have return targets for each. They have accountability for each one of those 5 lines of business. That's what you're playing for the next 5 to 10 years. But at the same time, they're at that flexion point of the J curve. You invest money and your profits go down. They're turning up on the other side of that J curve where those investments start to pay off and they start spending less. So you're going to see twice or maybe 3 times better efficiency improvement at Citigroup and return improvement at Citigroup than the other banks. And by the way, they're passing this magical line where they have single-digit returns to double-digit returns. When you do that, you go from value destruction to value creation. That is the number one biggest driver of bank stock performance. It's the number one big bank stock performer so far this year. I think it'll be the top performer by the end of the year.
Michael Mayo with us there on Citigroup, and we'll continue. He is, of course, large cap bank research at Wells Fargo. Fairly to say, legendary industry. Also very cut and chiseled.
Yeah.
He's like, he said to me, Tom, you got to hit the weights again.
Got to hit the gym, Tom. Come on.
He's like, Tom, get in the gym. Thank you, Mike Mayo. Mike Mayo's going to come back with us here with the Dow negative 144. The VIX under 16, 15.79. I'm sorry. Bitcoin in the news. Are you going to handle that in the 10 o'clock hour?
All over it. Guess who's joining me again in the 11 o'clock hour? Matt Miller.
So you have to.
That's I'm brushing up on my Bitcoin, my
His
crypto.
interns are so darn rude. They're like walking around, doing the Bitcoin thing. Matt Miller at 11 a.m. and there's some economic data out there as well. I look at the 10-year real yield as Mike Mayo looks at it, 2.09%. I'm going to call that sort of Midland right now. We continue with Mr. Mayo of Wells Fargo. We're on YouTube. It's a new digital distribution. Sign up, subscribe, Bloomberg Podcasts. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks falling as President Donald Trump's latest tariff threats kind of fuel concerns about a trade war. We have the S&P 500 sliding from a record. Right now, it's down about 0.2%, 14 points. The Dow down 0.3%, 172 points. The Nasdaq down 0.2%, or 50 points. We have the 2-year yield at 4.29%. That's down 1 basis point. The yield on the 10-year, 4.56%, and that is little change. To commodities, we have spot gold $2,934 an ounce, and the Bloomberg Dollar Spot Index is little changed. We have chemical firm Zelenskiy. Their shares are down about 21%. It said it sees persistently weak global demand in end markets. That includes paint and coatings. And then we have Etsy. Their shares down 9%. Fourth quarter results missed expectations. It also gave an outlook that disappointed. And finally, Prada, working with advertisers to evaluate the Versace brand. It's weighing this bid for the Italian fashion company owned by Capri. So Capri now up about 3%. That is your Bloomberg Business Flash. Tom and Paul.
Perfect timing. I've had inquiries out on YouTube. Why am I not wearing a bow tie today?
Yes.
Okay, here's
Big
the
story.
thumb, and here's the Band-Aid. On radio, I've got Lisa help me with this. I did major surgery here. The thumb, vet bill bit me.
No.
Mrs. Keene got vet bill a Prada coat.
Yep.
And the vet said, I'm not wearing Prada. And the damn dog actually bit me.
Sure.
So there I am, and I don't have a bow tie today. I'm sorry.
This could go on for a while. I mean,
You
this
know,
might not be a
I don't
one-day
look as cash as Mike Mayo and Paul Sweeney, but I'm never going to get there. Why don't you save us, Paul, with more brilliant questions for Mike Mayo?
Mike Mayo, Wells Fargo, covering all the banks there. On your Citigroup pick, I'm fascinated by this. Now it's all coming back to me. I walked out of the door of Citi after a few years, sold all my stock literally on the day I walked out the door.
Very cool.
In January of 2000. Jane Fraser, I think she's got a pretty good message for the street. How is she different from other CEOs at Citi who have also promised change and to clean things up and to streamline things?
Oh boy, you're triggering me right now. So I think of the other CEOs. If it goes back, Tom Keene probably remembers Walter Wriston, right? Countries don't go broke.
My father knew him personally. They used to talk farms and all. He worshipped Walter Wriston, and then it ended.
Yeah, let's lend to Latin American countries. They'll pay us back. They did in 1987. You had big charges. Then you had John Reed back in the early 90s. He had the Saudi prince, had to pump it up with capital. And then you had the whole Sandy Weil era that came later. And then you had long-term capital with the problems. And I call that Noah's Ark because they brought two of everybody along with the big mergers with Travelers. And then you had Vikram Pandit, which first you had Chuck Prince, the lawyer. And remember, he's going to keep dancing until the music stops. And that ended very
Then the music stopped.
And then the music stopped, and basically they effectively failed, and the government bailed them out. And then you have Vikram Pandit, which was kind of there. And then you had this guy, Mike Corbat, who didn't change the strategy at all. And through it all, I'd say Citi was very arrogant. Very arrogant. Jane Fraser gets there and says, you know what? We have a lot of problems. We have a lot of things to fix. The first step is to recognize that you have a problem. And it's taken her a little bit longer than some people would have liked. I understand that. And the expenses are a lot higher than they should have been.
Right.
But recognizing a problem. Then last year, everyone said Citi's going to mess up. 3 concurrent initiatives. One is this org simplification. They went from their 5 decades of matrix structure, 5 lines of business. They eliminated 5 management layers. They told all the employees you're going to have to manage more people. It was gut-wrenching, and they fired some people, and that's always tough. And then you have, they're divesting, over a dozen consumer operations in a dozen countries outside the U.S. And then they have this transformation, the back office. They're doing this all at once, and everybody said Citi's going to implode. Well, guess what? Last year, Citi met its efficiency targets. They beat their revenue targets. They met, and so going through those major changes. So people say, what's the proof? What's the evidence? Look at the results of last year and their guidance. 3 years in a row, they're now guiding, if you believe them, revenues going higher and expenses going lower. So you're at that huge inflection point now. So they're recognizing they have a problem. They don't have that same degree of arrogance. They have the ability. They have the capability. They're in 100 countries. So if you're a global multinational corporation, you want to do payments or global investment banking, you got it. They're top 3 in credit cards. So they have the franchise, a new strategy, and Jane Fraser as the ultimate architect of where Citigroup should be the next decade.
You are more qualified on this than anybody I know on the sell side. You know, the great group of sell side analysts that are out there. Jamie Dimon this weekend was the talk of the weekend with some tape that was, you know, out of JPMorgan and that. Mike Mayo on work from home.
I loved the Jamie Dimon video, the audio that got leaked out to the press, and that's vintage Jamie Dimon.
It is. I agree with that.
He just said he's going to say what he thinks, and he says, if you don't like it, don't work at JPMorgan. We want you to work at JPMorgan, but if you need to work in the office so you can mentor people and everything else. And for JPMorgan and Jamie Dimon, that works, and that's their strategy.
Come on, when you were at Credit Suisse, you had mentors as you built your career. You went from, you know, the day you got canned at Credit Suisse, I think I spoke to you that day or the day after, whatever. The answer is you need mentors. Mike Mayo on work from home. Talk to the kids right now.
But I'd also say it's not one size fits all either. Okay, so there's different departments at different banks.
Different departments, but come on.
Different departments, different banks. I will say, though, Jamie Dimon at JPMorgan, it's worked for them. They came back early during the pandemic. Goldman Sachs, that was actually my first meeting at Goldman Sachs. I wasn't going to go in. My wife's a doctor, as you know, and she says, no, you're going in to meet with them in person. Okay, and I went to Goldman Sachs, and I'm telling you, they have this middle area where you have to transfer to the upper floors, and it was almost packed, and this was at a time no one was going back to work. So the JPMorgan and Goldman Sachs, they had they had so many employees back early, and look at the most successful, best-in-class firms. You want to weigh in on this,
Paul? Paul gets fired up.
But it's not one size fits all. So if Citigroup decides they're going to allow some people to work remotely, that might be a competitive advantage in hiring certain people. So I'm saying
computer people. I get it.
Well, just sometimes you can get great people if you make some accommodations. So Jamie Dimon's not of that, you know.
Well, we got Lisa Mateo. I mean, that's the way it works.
Hey, Mike, talk to us about Bank of America. Again, former employee through Merrill Lynch. I've worked pretty much everywhere. Talk to us about the Bank of America story. Sometimes that gets lost a little bit between the Jamie Dimon talk and maybe the turnaround at Citi. What's the story at Bank of America?
Look, we have three words that sum up the largest banks. That is, Goliath is winning. Okay, scale is making more difference in banking than ever before in the history of banking.
Why don't you tell the European regulators that? I mean, because they've lost. They've lost.
Absolutely lost. The five biggest U.S. capital market players, Bank of America, JPMorgan,
Goldman, Morgan Stanley.
Morgan Stanley, and B of A.
Yep.
They've gained market share in capital markets since the global financial crisis, you know, in spades. And I think they'll continue to do so. And you're like talking about twice or three or JPMorgan 4 times larger than the European bank peers. And by the way, this whole idea that U.S. banks should not merge, that's like the Brian Moynihan or Jamie Dimon Protection Act. Right. Why do you want to protect them? You should have more large banks. PNC, Bill Demchak talks about wanting to have another $1 trillion bank. He'd like to be that. But the unintended consequence of regulation for the last decade.
30 seconds. Do you have a regional right now you would own around that Mike Mayo theory? Do you have a regional that could be mergeable with the people from Pittsburgh with their beautiful baseball park?
Look, if you want a name to own, it's Citigroup, it's Citigroup, it's Citigroup. I don't want to dilute that call.
But it's a compliance risk.
We're waiving all portfolio limits, okay? But it's really Citigroup and then, look, and JPMorgan and Bank of America. Those are the three Goliaths. They benefit.
You're not even going to look down in Gerard Cassidy's territory.
Look, PNC is a quality bank. They're the national Main Street bank. They're in the 30 largest cities. They have a 10-year runway. Bill Demchak is an exceptional CEO. And they should have revenues growing far faster than expenses, and they'll benefit from the rising tide that lifts all ships. But again, for me, it's Citigroup is my primary recommendation.
Mike Mayo, thrilled to have you in today. Thank you so much. He's with Wells Fargo, folks, and covers the large cap banks. And as I said earlier, Paul, the turn in Europe in banking is amazing.
No, it's actually, when you look back on it, it's kind of a shame what's happened to European banks, that how they've just fallen completely behind
off the radar.
The U.S. And I mean, you think about a Deutsche Bank, you think about a Barclays.
David Harrow upgraded his Green Bay Packers tickets, with the way they're moving. Mike Mayo, thank you so much. Greatly greatly, greatly appreciated this morning. Right now, we got a tape. It's sort of, there's a weight to the tape, is how I'd put it. The Dow negative 157, SPX negative 17, Nasdaq's there as well. Let me look at the percentage. I got to get the mouse out for that. Down 0.3% on the Nasdaq. From New York City, this is Bloomberg Surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. What a day it's been. Paul Sweeney, Tom Keene. Thanks to our team for a great, great setup. The interns are on fire. The interns in the winter do
Phenomenal schedule.
They do better than in the summer because they're not out closing bars down at 2
exactly right.
a.m. as well. There it is, FOMC meeting minutes. The one person at Bloomberg who will not be reading the minutes here this afternoon is Ira Jersey, because he's going to be turned into Liverpool and another team playing football.
Aston Villa today. That's right. I forgot.
So we're going to give him a wave there in a minute. Ira Jersey, they featured you in Zero Hedge yesterday with Will Hoffman. And the basic idea here is in your wicked interior granular trust market of T-bills and SOFR, things are getting a little tense. How tense is it?
Well, it's not very tense right now, but it is noticeable, and that was the point of the note that we put out yesterday morning was, look, I hate the debt ceiling. I think it's the silliest debate Congress has. Let's not mess around with the full faith and credit of the United States government. But because we do have the debt limit in effect right now, people are worried, and money market mutual funds are worried about liquidity in a couple of T-bills around when there might be a delayed payment for some of them, and that's why you see this kink in the T-bill curve right now.
Are these treasuries range bound right here, Ira? Every time I look down and read the 10-year yield, it's 4.5 something, it seems like. Are we pretty tightly range bound here for the treasury market?
Yeah, I think for now, unless something significantly shifts one way or the other in the economy, whether it's inflation going up or down, or the economy, job market, slowing down more meaningfully than it already has, I think that we're probably kind of stuck here for the moment. And the Federal Reserve is probably on hold too. So unless the market starts to price for a meaningfully different policy outcome, I think that 10-year treasuries are probably just going to hover, probably in a slightly broader range than we've been in the last 2 weeks, but certainly somewhere, call it 420 to 480.
I mean, I don't want you to do a gold thing, Ira Jersey. It's really not your remit. But there's this hysterical analysis of China and their ability to buy our full faith and credit paper. Do you have a handle on that?
I do. So I think there's a couple of things we have to realize. China has not been a net buyer of treasuries for a decade. We're all worried about the fact that they own, $800 billion of treasuries. Remember, that used to be $1 trillion. That's number one. And number two, they made a policy choice a while ago to shift the basket of the currencies that they hold to more match their actual trade flows. So that means that, the United States is not their only trading partner. It might be their largest, but it's certainly not their only one. So, moving away from a primarily dollar portfolio to one that includes euros and yen and Swiss francs and the like, makes a certain amount of policy sense. So I do think that China will continue to own some type of U.S. asset, whether it's treasuries or mortgages or anything else. And if they don't, that just means that their currency strengthens against the dollar, and that probably doesn't help them from a macroeconomic perspective. So they really don't have a choice. They either have to buy some form of dollar assets or hold a certain amount of dollar assets, or the
Right.
currency strengthens. It's their choice.
Got an email from one of Ira Jersey's interns, and you got to ask him, is Leon Bailey critical to Aston Villa competing with Liverpool today?
I don't think so. You know, Leon's been an important part of Villa for the last couple of years. By the way, the kickoff's at 2:30, so I will have half an hour to read those minutes and comment on them, just so you know that. I have my schedule down for the day, don't worry. So yeah, Leon Bailey's important, but yeah, they have much more depth now, right? We talked about Marcus Rashford last week, and
Right.
so I think Villa has a shot. But Liverpool, let's face it, they're the creme de la creme of the Premier League right now, so it's going to be a tough nut to crack. Even a point today, so even a draw will help Villa out.
Off you go to pre-read the minutes. He probably gets it front.
Yeah,
probably goes, Jerome, can I get the minutes early? Ira Jersey, thank you so much for Bloomberg Intelligence today. Massive shout out to our team. What an eclectic set of conversations today. Again, out on YouTube, it's our new digital distribution. Humbled by that response. Subscribe at Bloomberg Podcast. We're playing Canadian music today. Tomorrow we'll play American music, Boston music. We do this for the NHL. Stills and Young of Canada.
Love the one you win.